rhetoric that says the economy is their #1 concern.
And Marie, they need to explain that the numbers have been heavily influenced by one-off effects, painful one-off effects, especially with respect to the hurricanes, but they're one-off effects for now, and also by the strikes. And they need to do that because they have not taken sufficient control of the narrative. We talk day after day of economic exceptionalism. That's not what the narrative is out there, as you know. The narrative is out there is about the cost of living, about inflation. And people don't realize that this economy has been outperforming not just expectations, but has been outperforming the rest of the world. And this is really important. As to the Fed, look, it boils down to two numbers. One, mentioned by Jeff, ECI, the 0.8% increase, the quarterly increase in employment cost. You look at that and you're relaxed. The other number is the PCE inflation, the monthly 0.3% increase. You look at that, you're not so relaxed. And they're going to have to balance that. And I think if you balance that, you end up with a 25 basis point cut. You certainly do not go to 50.
Mohammed, November just feels like an easy decision for them. If they don't have a result to the election, if you get the jitters in markets, it's another reason to cut by 25 basis points. December is where things get a little bit harder. A question we've gone back to on the program a few times, we've had this discussion with you too, and I'd love your thoughts going into the weekend. Whether you really believe next week's election has the real potential to redefine the economic backdrop, not just in America, but worldwide. And whether by the time we get to December, the Federal Reserve will really have to think about the policy initiatives on the table, even if they are not yet reality in Washington, D.C.
John, I've been bemused by how confident some people have been in predicting what will happen here, what will happen there. Look, you're trying to solve, think of it as a 4 by 3 plus 2 matrix. So think about it. There are 4 potential outcomes in Congress. There are 2 potential outcomes for who wins the presidential election, and a third one, which is no one for a while. And then, even when you solve for Congress and you solve for the president, you've got to solve for a third issue, which is how much of what is being said will actually be implemented. I remember what happened in 2016. I remember how the market turned on a dime when the winning candidate at that time came out with a completely different narrative than what was said during the election campaign. So the Fed on Wednesday morning is not going to be able to solve for this 4 by 3 by 2 matrix. So I think what they're going to do is say, we put this aside, we will react based on what we know, and then we will revisit this issue.
Jeff, that's what it feels like. Just to build up what Mohammed was saying, it feels like we're on autopilot to the high estimate of neutral, which could be around 4. So you get a few more cuts, you get closer to 4, and the decision gets harder. Because I think for many people, we are truly flying blind into 25 and perhaps even beyond, based on the outcome of next week. And Jeff, I'd love your view on that and whether you agree with that view.
Well, I think the key observation is we've gotten a little bit closer in terms of a more reasonable expectation of the level of Fed cuts relative to the debate or the distribution around where is neutral. Whereas a month ago, you were very much weighted to one side of that debate, which is we're very far away from neutral. We got to cut quite a bit. And what is the data that sort of pushes against that excessive amount of cut? The very low level of neutral? Economic growth, right? We know it. You don't know where neutral is, so you know it where you see it, and where you see it is in the data. And so the piece that has kind of been missing here for a while is where is the slowdown? Yes, the payroll. Yes, the labor market are slowing, but they're not tightening, and they're certainly not eroding to the level of degree that would scream, oh, we need to cut 50 basis points at each meeting because this economy is hard landing. So it really comes back to this kind of basic fundamental, which is you see it in the economic growth data. There's lots of inputs to that. We can look at earnings, we can look at payrolls, we can look at layoffs, you can look at the leading indicators for the job market, and not much in there screams screams that this is excessively tight. The only thing that screams that you're excessively tight is a historical comparison of the real rate relative to past real rates. Outside of that, the economic data says financial conditions are how monetary policy transmits. It's much easier than the rate or the real rate would imply, and so you don't need to cut as aggressive. And that's kind of recognized in the bond market, so there's less disagreement, so therefore less potential volatility from realizing that disagreement.
Mohammed, just before you go, a final word, please, going into next week. How would you navigate next week?
John, I would wait, and mentally, I would change the paradigm. For a very long time, we looked at the stage, the economic and policy stage, and we looked at the Fed as the principal actor. Going forward, we should think of the Fed as stepping back, and there'll be three other principal actors. One is fiscal policy, the second is tariffs, and the third is the combination of reforms, deregulation, and industrial policy. So mentally, John, we're going to have to evolve. And it's really hard because we have been conditioned to look at the Fed as the only game in town. But we're coming into a world, as Jeff said, where the Fed is going to be going backward, going to the side, and allowing three other actors to determine where this economy is going. And we just need to change our mindset to make sure we allow for them to enter our mind and assess them better. And it's going to be hard, John.
I'm going to be kind to you both, because that's hard enough. I'm not going to ask for election guesses. Mohammed, you can go. Appreciate your time, sir. Mohammed Al-Aaron of Queen's College, Cambridge, alongside Jeff Rosenberg of BlackRock. If you are just joining us, you missed the fireworks. 12K. Big downside surprise on a jobs report. We were looking for 100, a huge hurricane disruption in this number. Some weakness, some noise that a lot of you assume we can look through. And the Federal Reserve themselves can look through as well and cut 25 basis points next week. Between now and then, we've got a big election coming up. So as we count you down to the opening bell, here's the trading diary through next week. On Monday, a sprinkle of economic data, durable goods. Tuesday, the US presidential election. On Wednesday, PMI data. Thursday, a decision from the Federal Reserve, another round of jobless claims, plus a rate decision from the BOE. And on Friday, I've got no idea if you'll still be awake by the time we get to Friday morning. UMich consumer sentiment. Mike McKee, thank you, sir. As always, as we look ahead to next week, coming up on Monday, Stephanie Roth of Wolf Research, Dan Niles of Niles Investment Management, Mike Wilson of Morgan Stanley, and the Ryanair CEO, Michael O'Leary. Have a wonderful weekend. Thank you for choosing Bloomberg TV. This was Bloomberg Surveillance.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action, every weekday, only on Bloomberg Television. Context changes everything.
Well, I think what's happening is we're starting to bring realism into the discussion. I mean, I think understanding the global energy system, the scale of that system, the important role that it plays in everybody's life around the world, and then thinking something that's been built over 150 years, trillions and trillions of dollars of investments that's playing such a critical role in the economies around the world, how you transition out of that system. And I would say transition from a higher carbon emission system to a lower carbon emission system. We started out with a very narrow solution set focused on wind and solar and EVs, and assumed or aspired that that would address the total set of the issue, and it doesn't. We need to be more realistic around, to Patrick's point, there are a lot of solutions that are going to be required. We should stay focused on the problem statement, which is emissions, and reducing those emissions, and less focused on exactly how to achieve that, and let every company, every sector, all technologies compete for the most cost-efficient way to reduce those emissions, and we will make progress much faster, which will mean making today's system more emissions efficient, while we introduce new systems that have lower emissions. And then with time, you will transition and we'll make progress.
about artificial intelligence? Is artificial intelligence going to enable you and others to say, we have enough information to know exactly what something is going to be worth in terms of insuring it or not?
Artificial intelligence is finding its way into our business in a variety of different factors. I think the first piece is getting much better insight into data, which allows us to make better decisions on underwriting. It's also a great opportunity to service business better in terms of like call centers and different ways of what's using robotics and other AI will be very helpful. But it is an emerging practice within the industry and one that is evolving very quickly. So it's also going to present risks that other companies, how they use it and how they use large language models and making sure the decision making is very sound. So it's complicated, but it definitely is benefiting the business today.
All right, futures higher after a big miss on that payrolls report. 30 minutes until the cash trade starts. I'm Katie Greifeld.
I'm Shonali Bassick. Matt Miller is off today, and Bloomberg Open Interest starts right now.
All right, coming up, that jobs report shows a massive hit from storms and strikes. Next up on the horizon, the U.S. election and a Fed decision. We'll get the view from the White House, BlackRock, and PIMCO. Acting Labor Secretary Julie Su, Rick Reeder, and Tiffany Wilding join the show this morning. Plus, from big tech to big oil, we're wrapping up a busy week of earnings. Chevron CEO Mike Wirth joins us for a C-suite conversation later this hour. Let's take a look at where markets are trading, though. It's a busy one, of course. We got Amazon and a few others last night. That was lifting the market pre-market, and we're holding those gains despite that whiff on the labor market report. You can see the S&P 500 currently up about 0.5%. Big tech also having a good morning after that wipeout that we've seen over the past week. The NASDAQ 100 currently higher by about 0.4%. And then you see the bond market. That's where things get interesting. It seems like bond traders taking that jobs report at face value, sending yields lower. The 10-year Treasury yield currently lower to the tune of 5 basis points, Shonali.
And less than a week from that FOMC meeting, Katie. Of course, what a way to end the week. Let's look under the hood here. Some movers to watch. Apple still trying to rebound from one of the longest sales slumps in history. Pre-market, Apple now down 1.8%, but as Katie was saying, not really shaking off that love for the NASDAQ 100 today. And what is helping it is Amazon, up almost 7% pre-market, reporting strong earnings, showing growth across cloud and retail divisions. Also taking a look here at Intel, up more than 6% pre-market, surging after a revenue forecast slightly above estimates, Katie.
All right, meanwhile, we go back to the macro and we go back to that jobs report because U.S. hiring advancing at the slowest pace since October 2020. The non-farm payrolls report increasing just 12,000 in September, hit by, of course, both labor strikes and powerful storms. Let's bring in Bloomberg's Mike McKee now for a closer look and to talk about the weather because this was a noisy report.
Everybody talks about the weather. Nobody does anything about it. That's the old saying. Very noisy report. We did have 46,000 manufacturing jobs lost, and that fits with the Boeing strike and a strike at a Textron factory during the month. So that part makes sense, and we can figure that out. The unemployment rate, 4.1%. The BLS says that was not affected. The survey was not affected by the weather. Average hourly earnings probably a little higher because the lower paid workers are the ones who probably lost their jobs in the service industries. But the revisions certainly affecting what the number is this month and for the last couple months. But the most important thing is BLS says they can't quantify the hurricane impact on the establishment survey. They know it's there. The response rate to the survey was the lowest since 1991. So a lot of companies unable to send in their numbers, and they should show up next month. So expect big revisions next month. I'm not going to predict which direction, but expect big revisions next month. Otherwise, it kind of looks like normal in the report in terms of what actually happened because healthcare, state and local governments were the biggest job creators, which we have seen for months now, and most jobs lost. Manufacturing is explained by the weather, and then employment services, which could go either way. Could be because the economy is slowing, or it could be because people just couldn't report to work.
Even pretty quickly here, Mike, what about the revisions in particular? Let's harp on that for a second, because the August revisions in particular were quite large. What does that mean for the Fed moving forward?
Really doesn't mean anything, because at this point, it's what happened in October and what happened going forward. What happened back in August is sort of irrelevant to the Fed now that they've started a cutting cycle and gone forward. It maybe shows that they didn't need to do 50, but it's already done. So now we look at what the market thinks the Fed is going to do, and the market thinks the Fed is going to be basically unchanged with a quarter-point cut this next week. And then after that, it looks like you can see there's a little bit more strength for a greater cut in December, but we'll get another employment report before December's Fed meeting. So it's kind of not going to make a difference there.
All right, Bloomberg's Mike McKee, really appreciate, of course, the context on what is a pretty shocking headline number on that jobs report. Let's continue the discussion now, because joining us is Acting Labor Secretary Julie Su, joining from Washington. Secretary, great to speak with you again today. I want to talk about the response rate. We were just having that conversation with Mike McKee. So just how low was the response rate, of course, in the wake of Hurricanes Helene and Milton, and when would you expect it to pick back up?
Yeah, so the overall picture of this economy remains one of strong, steady, stable growth. We have seen positive job growth every single month under this administration. And as you noted, there were a couple of big factors that make this last month an anomaly. There were the devastating hurricanes, which meant that there were jobs that people, businesses that were closed. We saw this because the federal government was on the ground working with state and local officials to do everything from the search and rescue to reopening roads to making sure people had access to water and to power. And so those same businesses that might have ramped up in the last month on hiring were not doing so. At the same time, the other big indicators are still really stable. Unemployment rate remains at 4.1%. We've said this again and again, that most predictors were that that number could not go down to that for many, many years after the pandemic, and it's been steadily at near or below 4% for a very long time. GDP growth is up too. Wages continue to be up. Wages have outpaced inflation for 17 months straight, and so there are a couple factors that certainly we expected that they would affect the numbers for last month's report.
Well, Secretary, if we look at what wasn't as impacted by some of these effects that we're talking about on the weather, I mean, we still had big downward revisions to the September and August payrolls report. Obviously, this is going to be a bit of a noisy report. And looking ahead, I mean, you take a look to October or what we're going to get the next time around. How big would we expect those revisions to be?
Yeah, again, there were anomalous situations that affected this report, but even with those revisions in the prior couple months, the 3-month average, and we often look at averages because we don't want to make too much out of any one month. As you said, some of them can be noisy. The 3-month average for the prior 3 months is still 148,000 jobs grown in the economy. And again, if you look at overall indicators, I mean, people have been predicting a downturn for a long time in this economy, and it just has not, that's not what's happened. And that doesn't happen by accident. It happens because of steady leadership and, again, the investments that we've made in America, in manufacturing and construction and clean energy are having an effect. And that is one of the key reasons for the strength of the economy that we've had. Those investments will continue, and they are, that's part of the impact that we've seen over the last really 3.5 years.
The administration has guided that this would be a noisy report already, and of course this morning was indeed quite noisy. I want to go to the unemployment rate, because one reason it did hold steady was the decrease in the labor force participation. If we can hone in there, how would you characterize the impact of the hurricanes in participation?
Right. I mean, as you noted earlier, we don't have granular data about that, but I think it's a rational conclusion that the impacts of the hurricanes were devastating. I mean, they were devastating to human life. They were devastating to those communities in the Southeast, but they also are showing up in the jobs report. Having said that, the overall labor force participation rate also remains, it's steady. It's at historic highs. So when we talk about the economy, we have to look at trends. And the trends overall on all major indicators, continue to signal an economy that's very strong. And there is nobody who's reassessing the overall health of the economy based on these numbers, which are really affected by a couple of things that happened last month.
I'd also love for you to go into the impact of the strikes as well. Obviously, the Boeing strike, as well as others, have impacted that manufacturing number, but the Boeing's latest union endorsed the latest offer. Do you expect there to be enough votes to approve the current deal and ultimately end the strike, and on what timeline?
Right, so I've said a lot of times collective bargaining works, and there is no better example of that than when workers at the bargaining table get an unprecedented offer, and where the demands that they've had, they get a chance to sit down at the table and help to shape the future of their jobs, the future of their employer, and the future of their industry. It is true that the tens of thousands of workers being on strike are also one reason for the jobs numbers that we see this month, and the workers will decide. They have been demanding makeup in wages and other working conditions for what's been over a decade of not having them, and so they now have an offer before them, and it was a privilege to help bring the parties together to help move those talks along, and they'll vote on Monday.
And of course, Labor Secretary, you've of course been involved in ending other strikes. You're involved in these negotiations as well. We're counting down to that vote. What is still at issue here? Because of course, we've had a lot of conversations about wage increases. We know that there's been a lot of daylight between these two sides when it comes to the issues of pensions, for example. What is still left to be resolved right now?
I mean, these issues of retirement security, of benefits, making sure that workers can go to the doctor without breaking the bank, all of these things are fundamental to a good job. And in unions, workers usually have those things. They're not something that every worker gets to enjoy. And so at the bargaining table, all these issues come up. Again, these parties have not bargained for over a decade. And now that they've been able to do that, the workers have been able to surface issues that have been on their minds for a very long time, and they now have an offer that addresses the issues that they brought to the table. And I really need to give credit to both parties for coming to the table, for doing the hard work. These things are never easy. They often take all night. I've been at the table all night. This is the process of collective bargaining. It doesn't always look pretty from the outside, but we have seen the results time and time again, from auto workers to actors, all across the industry, where workers are seeing really historic gains. And that is a part of the picture of the overall economy. President Biden and Vice President Harris have said from day one, we can't build the economy that we want if we don't do right by working people. And the fact that wages continue to be up and wages exceed inflation are signs of that. Working families have more money in their pockets, and that's a good thing.
Our thanks to Acting Labor Secretary Julie Su. We do have to leave it there, but of course, we are just days away from an election, days away from a Fed meeting here, and so ever critical of these data points, and of course a lot of movement in the bond market as well. A 2-year standing about 7 basis points lower at 410 on the heels of this report. And we're going to talk about that bond market next with Rick Reeder. He's BlackRock Chief Investment Officer of Global Fixed Income. Get a read on these job numbers from an investor's point of view. This is Bloomberg.
will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Adversely to the interests of the United States in different ways. One of those ways is through the dissemination of disinformation, the intentional communication of false statements, and TikTok is an extraordinary avenue through which to disseminate disinformation to millions and millions of people.
So this can carry up to 20 people, and it can also transport goods. So you can configure it for goods transport within a city or transport of up to 20 people at a time. So this is gonna, the Robovan is what's gonna solve for high density. So if you want to take a sports team somewhere, or you're looking to really get the cost of travel down to, I don't know, 5-10 cents a mile, then you can use the Robovan. Some people call it the Robovan, but so yeah. You know, one of the things that we want to do, and we've seen this with the Cybertruck, is we want to change the look of the roads. You know, the future should look like the future. So, speaking of robots, so everything we've developed for our cars, the batteries, power electronics, the advanced motors, gearboxes, the software, the AI inference computer, it all actually applies to a humanoid robot. It's the same techniques. It's just a robot with arms and legs instead of a robot with wheels. And we've made a lot of progress with Optimus. And as you can see, we started up with someone in a robot suit, sort of down, and then we've progressed dramatically year after year. So if you extrapolate this, you're really going to have something spectacular, something that anyone could own. So you could have your own personal R2-D2 C-3PO. And I think at scale, this would cost something like, I don't know, $20,000, $30,000. Probably less than a car, is my prediction long term. Now, it'll take us a minute to get to the long term, but fundamentally at scale, the Optimus robot, you should be able to buy an Optimus robot for, I think, probably $20,000 to $30,000 long term. So, and what can it do? It'll basically do anything you want. So it can be a teacher, babysit your kids. It can walk your dog, mow your lawn, get the groceries, just be your friend, serve drinks, whatever you can think of, it will do.
It allows the Fed to bring the funds rate down to 4%, and then you figure out where you go from there.
And that's your expectation for next week as well, that the Fed will cut rates. There's an open debate about December, but maybe we'll have that conversation next month, because I want to talk to you about what's going on at the long end of the Treasury curve. You take a look at 10-year yields. When we were having this conversation a month ago, you said something along the lines of, when it comes to the 10-year yield, we're probably close to fair value. We have moved up meaningfully since then. We were at 4% or so a month ago. Now we're at 4.25. What do you think is happening at the long end, and do you think this is a buying opportunity?
So I'll say a couple of things. We live in a context now where rates are pretty stable. I mean, it was a significant move in the 10-year point. And that being said, you think about where we've moved over the last couple of years, the last few years. Listen, I don't think there's a lot of money to be made in interest rates. I certainly don't think there's a lot of money to be made out the yield curve. I mean, if you look at total returns, if you recap October, a harsh performance in terms of the long end of the yield curve and what it did from a total return performance. And even though the front end came back, cheapened up a lot. I mean, we went from the lows where we were pricing pricing D's 25. We moved almost 100 basis points back. But then you look at the return, you know, if you're an investor and say, gosh, how much did I lose? You actually didn't lose that much because you're just not running that much duration, not that much exposure. And this is part of why I really believe in this thesis. Like the back end, you don't really need to own the back end, just carry really well. And what happened this month that I think was extraordinary is now, I've said this before, we got our toys back. They priced hard landing last month, and now you got some cheapness, or you got certainly fair value and some real convexity in the front end of the curve. It allows you to build portfolios that clip 6.5% yield and just keep doing it over and over and over again. Listen, would I buy a lot of 10-year notes on this number? The answer is no. Would I buy some 10-year notes if we cheapen up a little bit? Probably not. I just love clipping yield in that front to the belly of the yield curve and just keep doing it month and month and month.
To the point that Katie was making on just how much we've drifted higher on the 10-year as well, and the confluence of factors that might be causing it, do you have an upper bound, a new upper bound where you think that this could be headed, especially knowing that traders are already looking for a potential breach of that 4 or 5 level, even headed to 5% in some cases?
So I think I'd like to figure out what happens on Tuesday, and I think I'd like to listen. I think the biggest issue and the biggest risk in the markets for the next year, 2 years, is going to be the size of the debt in the country. We got to issue an awful lot of debt. At the same point in time, that inflation, I would say most of the improvement in inflation has happened. Now you got base effects that aren't going to give you that much of a tailwind in terms of goods inflation. So listen, I just don't find it that intriguing to figure out. And by the way, I'll say it again, as I said last month. You know, a 10-year note around 4%, we could debate, is it 4.25 or high 3s? Nominal GDP next year, we think will be about 4-ish, and put a standard deviation around that, given we don't know what policy is going to look like until we see the election results. But gosh, if you said nominal GDP is usually where the 10-year trades, and that's about where we are. And so could you back up a little bit more, given the amount of supply the Treasury has to issue? I think so. But so listen, could you migrate a bit higher? But I think we're about fair. And but like I say, I don't find it that intriguing. I just find income really intriguing today, and you can build a ton of that.
You know, Rick, a lot of people have been looking at the 10-year and looking at how much of it could be a Trump trade baked in. You mentioned elections. What are you watching on election night? What are the screens that you're going to have up? What are the assets, and how do you expect them to move?
I have a lot of screens up. Certainly my equity screens, my rate screens, my currency screens, my vol screens. You know, we keep, so then what do you focus on? Listen, I think a big deal is going to be obviously where we end up in terms of the presidency, but I think the fabric of Congress is going to be a really big deal in terms of what is the mandate that whoever wins has. Listen, I think the Senate, it's still going to be, and I think at the net conclusion is you're still going to have a House that is still not going to allow the president either way to have a huge mandate because you're going to be so tight in the House. But I think some of these swing state numbers, obviously, in terms of what it means for presidency, but also for the Senate and the House, I think going to be a really big deal. So we're going to watch that really closely. Like I said, the biggest deal I'm focused on the next couple of years, who is going to address, or are they going to address, the debt and the deficits, and how aggressive will they be around it or not?
Right. Well, that's exactly where I wanted to go, so I'm glad you brought us there. Let's talk a little bit more about the deficit, because who knows what's going to happen next week. But no matter who wins, we know that the deficit is going higher. And sort of concerns about that fact has been used to explain what we're seeing at the long end of the yield curve. But I'll pose the question to you. Do you think that the deficit is an investable theme? Is that something that, you know, when you look long term, that you're putting money to work around?
So I'd say first thing, I mean, you know, I've said this before, I think you got to grow. I think in part of why I think the Fed's got to get the rate to a level that is a reasonable level, and I think 4 gets you to a reasonable level, then you pivot off of that, is A, you're creating a bifurcation in the economy between lower income and higher income, and I think you need to create more equilibrium. 2, I think you got to bring the cost of the debt down. I mean, the amount of bills we're issuing them front end at higher rates, we got to get that rate down. So part of why I like the front end is I just think it's a gift that because of where the rate is today, you can just keep building this income in a stable way. Listen, I think the other thing is we got to grow. The economy, U.S. economy, part of why the Fed has to get a rate down, you got to keep nominal GDP up. The only way you de-lever the economy is nominal GDP has to be above the cost of the debt. We got to keep growth going. And, you know, when I look at payroll reports or dynamics like that, and you see in these earnings reports, top-line revenue is still pretty good, and it bifurcated across industry. Nominal GDP has to stay up. We got to bring the costs down, and then obviously we got to deal with things like entitlement spending, et cetera, to try and rein in some of these burgeoning costs at the government level.
Rick, at the end of the day, there's a lot of conversation about this issuance schedule. I'm glad you brought it up. And to your point here about the issuance at the front end, how long can that be supported? Because until now, people say the debt load, people say the deficit, but there's 2 camps here. One that believes you can keep going with the current status quo, maybe forever. But there's another camp that says something has to break.
So the camp that says we should still go, I'd love to get in a room and go through the data. Listen, I don't think you can keep going. I think at the end of the day, we have to, you know, like I say, I think we should grow faster to outrun the debt, but I also think you have to have initiatives to deal with the debt. It's not sustainable at these levels. Debt service is not sustainable, and the size of the issuance, particularly in a world where the U.S. has to fund itself domestically. We used to be able to fund ourselves globally. That paradigm has changed. We know the dynamic with China is evolving, et cetera. Right. So I don't really agree with it. It can just keep going. Listen, I think as long as the Fed is moving down the rate, then I think we'll be able to fund a good deal of debt. But I think, you know, that's not going to happen for you know, longer than a year or so. Right. And then, you know, then it becomes a tougher situation.
Rick, I have 30 seconds left with you, and I need to get your views on corporate credit, because you have this dynamic where yields are very high, but spreads are very tight. And for that reason, a lot of people say that corporate credit looks pretty rich right now. When you're taking a look at the corporate landscape, are you paying attention to that lofty yield or those very tight spreads?
The yield. I mean, the only reason we get these yields, I mean, default adjusted, you know, you have more rising stars than fallen angels. You don't have a maturity wall that's been pushed out. And because the Fed's got the rate here, particularly in the front of the belly, you get these yields that companies, given default and not a maturing debt, they're super attractive. By the way, not just U.S., Europe, parts of Asia, which, you know, Europe and Asia, you could swap back to dollars, you get more income from that. So there's no ambiguity in my mind. I'd like spreads to be wider, but these yields are pretty cool.
All right, you can't eat spreads, but you can eat yield. Rick Reeder of BlackRock, great to speak with you. The Market Open is up next. This is Bloomberg.
What annoys you more, politics or bookkeeping? Listen, it's time to vote for yourself and make your business more successful. Get your books right, grow your business, and build your team. Call Zendu, the official bookkeeper and accountant for small business. Vote Zendu. Zendu, making taxes less taxing.
Well, would you look at that?
Jerry, you gotta see this.
Seen it. Trust me, after 15 walks, gets a little old. Yeah, I really should be retired by now. Wish I invested when I had the chance. To the moon. Unbelievable.
Stop waiting. Start investing. E-Trade from Morgan Stanley.
We can just have someone on Fiverr do it. It's no big deal.
Hiring freelancers just for small tasks is like hiring Martha Stewart as an...
Here's your coffee.
Oh, Beth.
best intern ever.
Sometimes great talent is right under your nose.
What's her name again?
Do you spend hours maintaining your gutters? Save that time with LeafGuard's maintenance-free system. Call 1-833-2-GUTTERS. Mesh filters sit on top of your gutters, building up debris and eventually clogging. Then they need to be cleaned too. Honestly, your home should have been built with LeafGuard gutters. LeafGuard's wraparound hood deflects debris and keeps water away from your home. The one-piece seamless system is strong, 20% thicker than average, and built to last. Plus, LeafGuard is guaranteed to never clog for as long as you own your home. Right now, get a complete LeafGuard system for only $99 down, $99 a month, and $99 installation. You'll also receive a $100 Visa gift card with a free gutter inspection and in-home estimate. Damage from clogged gutters can cost you thousands. Never worry about clogged gutters again. Don't wait, you've still got time. Call 1-833-2-GUTTERS today. That's 1-833-2-GUTTERS.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
As a contractor, I find sometimes the most impactful thing you can say is what you do on your own home. A couple of years ago, we put a pool in our backyard, my wife and I. There was only one choice for the decking around the new pool. We used TimberTech because of the low maintenance on the product. You can install it and just enjoy it for its lifetime.
ePay, Redwood. I mean, after 1 year, you're sanding and refinishing if you want to keep that sharp look. If you don't want to sand and oil every year, you want low maintenance, go with TimberTech.
All right, we are moments away from the start of trading on this first trading day of the month of November. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld, and you can see the pre-market action pretty good right now. Of course, we are sorting through a soup of earnings. We got a lot of big tech last night. We got a lot of big oil this morning. We're also trying to weigh that together with the macro. Of course, a miss on that jobs report in a big way. The U.S. adding just 12,000 jobs last month, well below the estimates of 100,000. At least that's good news, it seems, in the equity markets, deciding the Fed will cut rates next week. Will we get a decision on the president? Theoretically as well. In any case, you can see the bells ringing right now over at the NASDAQ, over at the New York Stock Exchange. Let's take a look, of course, at how the big indexes are faring just about 24 seconds into trading. Like I said, green on the screen from the S&P 500 up about 0.4%, even though you have Amazon up mightily right now after that knockout report last night. Big tech lagging a little bit. The NASDAQ 100 currently up about 0.3%. It's your small caps that are the biggest winner today. The little guys, of course, faring pretty nicely with the Russell 2000 up about 0.7%. The bet there, of course, is that this Fed is going to bring rates lower as maybe that labor market weakens. Let's take a look under the hood here. I mentioned big oil and Chevron topped earnings estimates for the third quarter as the company hits at potential job cuts as part of a new cost-cutting plan. We'll speak to CEO Mike Wirth in just a few minutes. And we also have to talk about Exxon because it also beat estimates driven by higher oil production in the Permian Basin. You can see shares up about 2%, Shanali.
That energy trade back on. Also watching your mighty Amazon over here, up more than 6.6% as the market opens. Apple is still trying to rebound from one of the longest sales slump in history. It provided a tepid forecast, down about 1.7% right now. Not enough to drag the NASDAQ 100 down, but Amazon's strong earnings had shown growth across cloud and retail divisions. Not the only cloud stock higher today either. Let's flip up the board here, take a look at Intel because it is surging. After providing a revenue forecast slightly above estimates, the company is working, of course, on a very long-awaited turnaround plan to cut jobs, spending, potentially spin off some businesses here. Intel shares up a surprise 5% in the market as it opens. Now, Intel CEO Pat Gelsinger joined Bloomberg last night to discuss.
we don't view any of these rumors as particularly meritorious. We laid out a strategy. We reaffirmed that with our board of directors. And obviously, as we've taken these steps this quarter and restructuring and getting our costs where they need to be, we have the capacity to go on the journey.
Bloomberg's Ed Ludlow conducted that interview, and I'm pleased to say that Ed joins us now from San Francisco. And Ed, you think about what companies really needed to show up on earnings day, and Intel, of course, would be among them.
Well, Intel's problems are their problems, very specific to them. But the rumors that Gelsinger was addressing there were, of course, the reports that Qualcomm and ARM were interested in buying some or all of the company. We had to ask him that explicitly, right? And that was his answer. But the rally in the shares this Friday, I probably as much relief as anything else, right? They took very painful decisions in the quarter gone that manifested themselves in impairment charges, and therefore there was a much wider bottom line miss than expected. But yes, in the final 3 months of this year, there are little signals that they might be turning a corner, little signals, because there's still a lot wrong there.
I want to switch gears here and also talk a little bit to you about what we know now after all is said and done from so much of the Magnificent Seven earnings period.
Sorry.
There were clear winners, weren't there?
Yeah, I think it's the idea that nothing's changed in their commitment to capital expenditures. Amazon is a consumer company in many ways because of Amazon.com and its retail businesses, but the cash cow in the operating income context is AWS. And so when you look at their guide for the final 3 months of this year, you guys describe them as mighty or mightily, but you have to remember they went through a sustained period of sluggish growth with AWS, the cloud unit. That's now returning, 19% top line in the quarter gone, reading between the lines in the quarter to come. They are returning to a position of strength where the spending is resulting in returns, revenue specifically tied to AI offerings, be it software platforms or specific tools.
And you always like to see that, of course, a return on your investment, if you will. And after, of course, this week of earnings that we just lived through, talk to us about the competitive landscape in the cloud. Of course, AWS mighty there. Microsoft disappointing a little bit when it came to the growth projections. And then Alphabet out with a surprisingly strong report earlier this week.
Yeah, the state of play, right, is that Amazon is the market leader. AWS is number 1, Microsoft Azure is number 2, and Google Cloud Platform is number 3. And after Google and Microsoft posted their prints, there was some evidence that they had taken market share from Amazon in the quarter gone. Then AWS gave us some growth. It's going to take time to see how that plays out long term. The principal difference with Microsoft is that the bar was very high. They went from 34% cloud growth in the quarter gone to telling us there will be about 31, 32% growth in this current period. 31 or 32%, like any company in the world would be like, yeah, I'll take it. But the bar is high from investors because of just how significant the spending commitment is from all three. And also put the AI bit to one side. If anyone can anywhere in the world, just put it to one side. There are other things you can do with cloud computing, storage, running other software platforms. So the dynamics between the three will be closely tracked from this point.
Ed, we thank you so very much for breaking it all down for us. Of course, it was a very busy week. I hope you get some rest until another type of busy week ahead. We're going to dive more into the markets now with Bloomberg's Jess Menton. It's really interesting. You're coming off of a tough month of October. You're walking into a bid into September. You have to ask if this bid is a strong one, given it was off the heels of tough jobs numbers. What are you seeing out there?
So it was tough, but actually at a certain point, up until yesterday, though, obviously with yesterday's declines, but in October, usually it's known as the most volatile month compared to the other 11 months if you go back through history, but actually bucked that trend this past month, kind of like what we would have seen in September, usually the worst month, but the S&P 500 was higher about 2%. But actually, yesterday, the S&P 500 snapped its longest streak of comp since 2021, so it actually went 29 sessions without a decline of more than 1%, which obviously that ended up happening yesterday, but obviously we're going into a pivotal week next week with the election, Fed decision, earnings obviously continuing, and then we do have a looming 13F deadline coming up too. But when you look overall for earnings, when you actually exclude energy companies, S&P 500 earnings growth actually double digits. It's around 10%. So those pre-estimates for earnings season were about 4%. If you look overall, it's around 7%, but it's really because of more of the commodities related type companies. Obviously, we had Exxon and Chevron report earlier today, but really a lot of that drag is due to energy.
Well, let's talk about about that a little bit more, of course, we'll be speaking to the Exxon CEO, Mike Wirth, or Chevron, rather, in just a couple minutes. We also had Exxon this morning. We have Halliburton next week. I mean, talk to us a little bit more about what's going on in that sector that's actually dragging down the index.
Well, in particular, because of the third quarter, how, if you look at WTI or Brent prices, obviously they were down about double digits, so that was what was weighing on that. It's interesting, though, because if you look overall, it's close to about 30% contraction if you look for the energy sector overall for the third quarter year-over-year basis, but obviously a lot of that is tied to commodity-type prices. Also, materials is another sector that is expected to underperform, but of course, overall, if you look at growth, it's supposed to still be driven by tech, communication services, but specifically when you're looking at that next week, as you mentioned, we will have Halliburton. We just had Schlumberger report a couple weeks ago, obviously the world's largest oilfield service provider, but earlier this summer, they both saw strong demand, but from Schlumberger, they did indicate that when it came to spending, we're seeing a slowdown in that. So that's going to be key to look at Halliburton next week, even though we did get a little bit of bright spots today from Chevron and Exxon.
Yeah, which is interesting, of course, because you think about the big oil majors, Exxon, Chevron, oil prices have just been going down and down. Just Menton, gotta leave it there. Really appreciate you. Of course, happy Friday. That is Bloomberg's Just Menton. And coming up, as we were just saying, Chevron's Mike Wirth joins the show on the heels of its earnings report. That conversation coming up next. This is Bloomberg.
Bloomberg's Morning Movers is brought to you by Bright House Financial. Build for what's ahead.
With income products from Bright House Financial, you can turn a portion of your portfolio into guaranteed lifetime income for whatever the occasion calls for. Bright House Financial. Build for what's ahead.
Are you overwhelmed with identity management in the context of omnipresent threats to your organization?
Hi, so no one knows what that means.
What's happening?
Just explain a walk to help secure digital identity. Keep it simple.
Like what?
Like when delivering a fresh uniform. Or viewing your results. Yeah, it's that. Or making Brad swoon at the high school reunion.
Oh, I love that color. Phew, that was a lot.
Oh, there's more. Like, lots more.
There's a place where global markets are always open, where you can explore and discover innovative new offerings and hundreds of trading products.
I'm Joe, visiting from San Francisco. How do you think about the role of technological advances, especially generative AI, on more traditional industries? Thank you.
Yeah, I don't know anything about AI. That doesn't mean I deny its existence or importance or anything of the sort. And last year I said, you know, that we let a genie out of the bottle when we developed nuclear weapons, and that genie has been doing some terrible things lately, and the power of that genie is, scares the hell out of me. And on the other hand, I don't know any way to get the genie back in the bottle. And AI is somewhat similar. It's part way out of the bottle, and it's enormously important, and it's going to be done by somebody. So we may wish we'd never seen that genie, or it may do wonderful things. And I'm certainly not the person that can evaluate that. And I probably wouldn't have been the person that could have evaluated it during I had one experience that does make me a little nervous, and I'll just explain it. That very recently, fairly recently, I saw an image in front of my eyes on the screen, and it was me, and it was my voice, and wearing the kind of clothes I wear, and my wife or my daughter wouldn't have been able to detect any difference, and it was delivering a message that no way came from me. So when you think of the potential for scamming people, if you can reproduce images that I can't even tell, that say, I need money, it's your daughter, I've just had a car crash, I need $50,000 wired. I mean, scamming has always been part of the American scene.
$32, keeping that overweight rating, though, citing increased conviction in its above consensus 2025 revenue growth estimate. Next up, you have JP Morgan raising its price target on Peloton to $7. That's from $5. Keeps its neutral rating, though. The firm says that expense savings are materializing faster than expected. And finally, we have Cinemark downgraded to neutral from outperform at Wedbush, which writes that the theater operator is priced for perfection. The firm's price target is $32. Meanwhile, let's head over to big oil. Of course, earnings out this morning for Chevron, beating. That is fueling a stock rally, as you can see. The oil giant reporting that it saw a production boost from the Permian Basin. It also announced a new cost-cutting plan. Chevron targeting a $3 billion savings, which could include job cuts. Joining us now for more is Mike Wirth. He is the CEO of Chevron. Mike, it's great to speak to you today. And I want to talk about the fact that, of course, you did beat estimates. The Permian Basin, obviously a bright spot there. But then there's the fact that West Texas crude, for example, can't seem to reliably break above $70 per barrel. As we read, of course, you are planning cost cuts, but how do you thread the needle between bringing those costs down without sacrificing margins too much?
Well, Katie, it's good to be with you this morning, and we did report a good quarter. We had strong operational and financial results. We started up some key projects in the Gulf of Mexico, and we returned record cash to shareholders. In fact, production was the highest third quarter ever in the history of our company. It was the highest U.S. production we've ever seen and highest production in the Permian. We started a big new project in the deepwater Gulf of Mexico and have more to follow. We're going to increase production there from 200,000 barrels a day to 300,000 barrels a day by 2026, and over $7.5 billion returned to shareholders through our dividend and share repurchase program. In a commodity business, we need to be prepared for cycles. And so capital discipline always matters, cost discipline always matters, and we can't control commodity price, and it's very difficult to anticipate commodity price. So we have to prepare for down cycles. WTI and frankly all the different commodities across our sector right now are seeing some pressure, but that's inherent in our business, and we're ready for that. We're built to win in any price environment with downside resilience and upside leverage.
All right, built to win. Let's talk a little bit more about the Permian Basin. It was interesting to see that your production there hit a new quarterly record. I know that you have a target for 1 million barrels per day from the Permian. When next year do you anticipate that you could hit that?
Well, any monthly or quarterly production is a function of drilling activity and when you bring wells online. We've got a strong track record here. We've grown the Permian production at a 15% compound annual growth rate over the last 3 full years. I expect we'll be up even more than that here in 2024. In the quarter we just completed, we were at 950,000 barrels a day, and so it's very, very clear that we'll reach 1 million barrels a day. It doesn't matter that much which month that occurs in or which quarter. We're on a strong ramp towards that, and the key thing is we're getting more efficient in everything that we do. We get better growth and better response for every dollar of capital that we spend. We're investing in new technologies that allow us to produce more out of every well that we drill, and so all of that accrues stronger margins irrespective of the price environment than we otherwise would have had. And one differentiating thing about the portfolio that we have in the Permian is across most of our acreage, we have zero or very low royalties that are payable to others because we own most of that property, which is a bit unique. And so you put all that together, and the Permian's a critical asset for our company and drives strong returns and a big part of the free cash flow growth story.
I also want to go to efficiency a little more. I know you've told analysts that cost efficiency is near to your heart, and you have flagged possible job cuts in the latest plan to reduce costs as well. I know that there could be asset sales as well. You mentioned new technology, but as it pertains to jobs in particular, how should investors, employees be thinking about how many jobs could be reduced in the United States?
Well, I think it's premature to speculate that. What we've talked about is $2 to $3 billion in structural cost reductions over the next couple of years. Some of that will come from portfolio actions where we take cost out and move some assets out of the portfolio. A good portion of that will come from productivity improvements and the application of technology to do things at lower cost. Some of it will come out of our supply chains, and then some of it will come from changes in how and where we execute work. That is where it could impact people, but it's early for us to be very definitive about that. We've got work underway to define that. As those projects and that work is further along, we'll speak more about that first and most importantly to our workforce and then to investors. So I would say stay tuned, but don't read the intent to continue to become more cost efficient, which is inherent in a commodity business and something you can never step away from, as only being about jobs. It's about much, much more than that, and jobs are a small part of the total.
I want to also ask you about the capital return plans here, because the decision to tap into debt to return money to investors through the form of buybacks, how long can you maintain the current buyback schedule, and what's the optimum debt level for you to take on in order to do so, especially in the face of volatile oil prices?
Sure. So we can sustain the current level of distributions for a long time. We've got a disciplined set of financial priorities that we've had for decades. First and foremost, to grow the dividend, and we've done that for 37 consecutive years. We haven't cut our dividends since the Great Depression. The second is to reinvest cash flows to grow future cash flows. The third is to maintain a strong balance sheet, which I'll come back to. And the fourth is to return excess cash to shareholders once we've satisfied those first three needs. 16 of the last 21 years, we've returned cash through share repurchases. Very consistent and ratable program, not only when times are good, but through the cycle. And we're very under-levered at this point. Our net debt ratio right now is less than 12%. In the fourth quarter, it's likely to go down even further as we complete some asset sales and continue to see strong cash flow generation in our core business. Could be back down into the single digits. Through the cycle, we've guided to a range of 20 to 25% net debt as something that we think is appropriate to maintain the strong AA credit rating that we currently have. And so in a commodity business, there are times when your cash flow is in excess of your dividends, your capital, and your share repurchase needs. There's other times when it doesn't meet those, which is why you have a very strong balance sheet and a lot of capacity so that you can stay consistent through these cycles, which is what our track record has demonstrated and certainly what our commitment to our shareholders is.
And Mike, I just counted again. We're 4 days away from the presidential election. So, of course, I have to ask you a little bit about policy here, because when Americans head to the polls, I'm curious, what's at stake for the U.S. energy industry? What's at stake specifically for Chevron, especially when you think about long-term investment decisions that you might be making?
Well, the most important thing for a long cycle business like ours, where we allocate capital over years and decades and have assets that operate for many decades, is to try to seek some consistency in energy policy and to try to help shape policy that balances economic competitiveness and prosperity with energy security and with environmental protection, and not to over-index on any one of those at the expense of the others. And so good policy is balanced. It encourages investment to keep our economy strong, to keep our economy secure, and to protect the environment. And so whatever the outcome of the election, those are the messages that we will take to the new administration, and we'll sit down and engage on things that we think are good for the U.S. economy and allow us to continue to invest in this country.
Appreciate the context there. I do also want to talk about your share price. I mean, it's not just Chevron. It feels like the entire energy industry really trades at a discount relative to some of the other sectors in the S&P 500, such as big tech. And that's on the cusp of course, record oil production in a lot of cases. Of course, the progress that you're making in the Permian, for example. What do you think investors are missing about the energy story or not appreciating?
Well, I think your point's a very good one. Our weighting in the S&P is roughly half of our earnings or cash contribution to the S&P. And so multiples and valuations in the sector are low. I think a decade ago, that was a function of the fact that there wasn't a lot of cash being returned to shareholders by many companies. Most of the cash or all of the cash was being reinvested in growth. I think the industry has changed. We don't see that condition today. We see companies that have become much more disciplined, that have robust dividend and share repurchase histories now that they're building. Ours has gone back over many decades, but the industry has, I think, now begun to exhibit those same characteristics, and I think shareholders are beginning to take another look. The other question I think that has weighed on the market has been the duration of future cash flows. A lot of talk and a lot of interest and commitment to evolving the energy system to one that's a lower carbon energy system. But what I think investors haven't fully grasped is that that doesn't mean that the age of oil and gas is ending anytime soon. Hydrocarbons represent more than 80% of global energy supply today, roughly the same number that they did 20 years ago. And as you look out many decades into the future, that mix may change, but it will change slowly. And that's against the backdrop of an energy demand that will continue to grow. And so the duration of these cash flows are much longer than I think they're being discounted into the valuations of the stock. And it's a real opportunity for investors to re-weight into the sector with the strongest companies. And we're beginning to see some of that, but I think there's a long way to go.
All right, Mike, that feels like a good place to leave it. Really appreciate you taking the time to speak to us this morning. That is Chevron CEO, Mike Wirth. This is Bloomberg.
Specialized expertise, unique perspectives, optimized results. Principal Asset Management. Actively invested. Learn more at principalam.com.
Tamara, Izzy, and Emma. They respond to emails with phone calls. And they don't circle back. They're already there. They wear business sneakers and pad their keyboards with something that makes their clickety-clacking clickety-clackier. But no one loves logistics as much as they do. You need Tamara, Izzy, and Emma. They need a retirement plan. Work with Principal so we can help you with a retirement and benefits plan that's right for your team. Let our expertise round out yours.
To Avalara, we can calculate sales tax automatically. Avalara.
What if tax rates change? Filing sales tax returns, business license guidance, cross-border sales, item classification. Does it connect with it?
I am unique.
I am unique.
I am unique. My wealth planning should be too. Because I am not my father.
I'm not my brother.
I'm cautious with my wealth. I have really bold ideas for mine.
That's why I trust my wealth to Northern Trust.
They have over 30 unique disciplines.
What worked for the last 50 years won't work for the next 50.
That's why I work with Northern Trust.
That's why I work with Northern Trust.
That's why I work with Northern Trust.
Northern Trust, for where wealth goes next.
Interactive Brokers pays up to 4.33% on instantly available cash in your brokerage account. How much interest can your bank or broker pay? Interactive Brokers' conservative and prudent risk management uniquely positions us to pay up to 4.33% on uninvested, instantly available cash in your brokerage account. The best informed investors choose Interactive Brokers.
Welcome back to Bloomberg Open Interest. A quick check on the broader market right now because we have gains building at the index level. The S&P 500 up about 0.8%. The same thing, too, if you take a look at the NASDAQ 100. Your small caps are the winner, at least for right now. The Russell 2000 currently up about 1.2%, but it feels like all the action is under the hood right now.
There are so many individual movers. I want to take a look at some that are moving bigly, as you guys like to say. Sitting in Matt's seat, taking his words, Wayfair down more than 4%. I think that's interesting because people have been watching those consumer-focused stocks. Atlassian up 15%. Charter Communications up almost the same amount. It's earnings season, of course, but interesting things happening in tech, media, and telecom, Katie. Also quickly watching Boeing here as well. Supermicro, DJT. Listen, Supermicro, I don't know if you heard this. They're reporting on Election Day.
Oh my God. Burying that report.
Right.
It seems like, of course, a really tough go for Supermicro, of course, and Boeing making some progress on those labor negotiations. Up next, we'll be speaking about the jobs market with PIMCO's Tiffany Wilding. Great lineup. Don't go anywhere. This is Bloomberg.
Mizuho. Sound familiar? Financing the aluminum giant, building better homes? Mizuho was there. The merger of two logistics titans? Also us. Anywhere an industrials company needs a corporate and investment bank, we're there. Mizuho Americas.
Your business needs a network it can count on, even during the unexpected.
Power's out.
Power's out.
Power's out.
Power's out.
Power's out.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
LeafGuard is guaranteed to never clog for as long as you own your home. Right now, get a complete LeafGuard system for only $99 down, $99 a month, and $99 installation. You'll also receive a $100 Visa gift card with a free gutter inspection and in-home estimate. Damage from clogged gutters can cost you thousands. Never worry about clogged gutters again. Don't wait, you've still got time. Call 1-833-2-GUTTERS today. That's 1-833-2-GUTTERS.
We're excited to do business with you, but before we sign, I gotta ask.
Sure, anything.
We searched you online, and maybe you can explain this?
Can't believe that garbage is still coming in. That is so false.
Frustrated with your online search results? Call Reputation Defender today to join tens of thousands who've improved their online reputation. Get your free reputation report card at reputationdefender.com or call 1-877-866-8555.
You know, the TimberTech products compared to wood, it's really the...
The autonomous future is here. As I said, we've got 50 Teslas driving autonomously. We're trying to give you a sense of what cities will be like in the future. And when you get in, you'll see like it's really quite a wild experience to just be in a car with no steering wheel, no pedals, no controls, and it feels great. We have enough vehicles here, so everyone should be able to try it out and experience the set that we've built here. It's a very big set, so it's like really, we've used sort of, I don't know, 20, 30 acres or something like that. It's really big. So it goes on, the ride's long. And we set it up to feel like a ride, like a park ride. So it'll be cool, and you'll get to experience it tonight. Something we're also doing is, and it's really high time we did this, is inductive charging. So the robotaxi has no plug. It just goes over the inductive charger and charges. So yeah, it's kind of how it should be. Thanks, guys. I love you too. So one of the things that is really interesting is how will this affect the cities that we live in? And when you drive around a city, or when the car drives you around a city, you'll see there's a lot of parking lots. There's parking lots everywhere, parking garages. So what would happen if you have an autonomous world is that you can now turn parking lots into parks. And so we're taking the ing lot out of parking lot. Welcome. So there's a lot of opportunity to create green space in the cities that we live in. So that would be quite fantastic. Oh, and also, what happens if you need a vehicle that is bigger than a Model Y? The Robovan. The Robovan is This is we're going to make this, and it's going to look like that. Now, can you imagine going down the streets and you see this coming towards you? That'd be sick.
We had 2 really large hurricanes and 2 really significant labor strikes in October. We estimate those to be something like 100,000 job hits.
A single death from the McDonald's E. coli outbreak is devastating to Debbie Bunnell of Grand Junction, Colorado. It was her father, 88-year-old J.C. Smith, who got ill not once but twice.
I would hold his hand and pray and tell him, just try to rest. Try to rest. We're here with you, and we're getting help for you.
Cycling while texting or intoxicated could put you in jail in Japan. CBS's Vicky Barker.
Within hours of the new law taking effect, Japanese police had already recorded 5 violations, including 2 men caught riding bicycles while drunk.
Early trading on Wall Street has the Dow up 310 points, the NASDAQ up 195. This is CBS News.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are 2 big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, good Friday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We're also streaming live on YouTube, so head over to youtube.com and search Bloomberg Podcast. That's where you will find us. Norma Linda sitting in for Alex Steele again. Nora, thanks. Welcome here.
Lovely to be here.
We got a lot of stuff going on, a lot of economic data, a lot of earnings to parse through. The markets are moving higher here. Coming up, we're going to check out with Tim Fiore. We had some ISM data came out today. Again, on the manufacturing side, a little bit weaker than expected, so still some struggles in the manufacturing. We'll break that down with Tim Fiore. He's the chairman for the Institute for Supply Management. Joni Biley is going to join us here. Employee Bridge, we get her thoughts on these jobs numbers. A lot of noise in the numbers this month, and we'll try to parse it out. Thomas Black, Bloomberg opinion columnist on the latest Boeing news. Apparently there's another deal. We'll see if the rank and file will approve this deal and get the folks back to work and get those planes coming off the line and drive some cash flow for Boeing, so we'll get the latest there. Right now, let's kick things off and get a Bloomberg Business Flash with Mr. John Tucker.
Okay, since we're data dependent, the ISM Manufacturing Index, this is a smaller piece of the economy behind services, that is. 46.5 is the actual reading. Remember, 50 is that dividing line between expansion and contraction. We're looking at 47.6. That was the expectation, so a little lighter. S&P 500, you have 8 of the 11 major industry groups higher right now. Consumer discretionary, best performing group. Communication service, the biggest drag. Amazon among the leaders after its earnings. Apple shares among the laggards after its earnings. And ahead of next week's Fed meeting, non-farm payrolls increasing 12,000 last month. So that was kind of obscured by hurricanes and as well as the Boeing strike. The unemployment rate held at 4.1%. Meantime, Chris Verone at Strategas Securities remains positive on stocks.
we know we don't know what's going to happen next week, but we do know that the trend of the market's been positive, and it's been positive for 2 years, and I would expect the continuation of that. We just haven't seen, even the last couple of weeks, as the market's gotten a little choppy here, we haven't seen the real internal deterioration that I would expect ahead of a big problem. I don't know if you get a correction or a pullback post-election, but I do think it's ultimately viable.
ExxonMobil, Chevron, they beat analyst profit output and sales estimates. Rising oil production from the Permian Basin helped offset weaker crude prices. S&P 500 up 45 points. The Dow up 360. The NASDAQ 100 right now up 148 points. Put on your thinking caps, please, ladies and gentlemen. The biggest labor productivity gains of any U.S. sector over the past decade. What sector? You want to guess?
Bankers.
No. Well, I thought you would have said technology. Oil and gas producers.
Really?
Yeah.
Okay.
Believe it or not. Part of the reason there is the way they've been drilling. They use what's called a horseshoe method, where you can, curve around in the ground and go in the Permian Basin, and you can cut your drilling costs by half, the production costs. Anyway,
good for them.
Put that in your pipe and smoke it. We check the markets all day long, right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Hi, Nora and Paul.
All right, John Tucker, thank you so much. We appreciate it. Norma Linda, she's sitting in for Alex Steele today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We are streaming live as well on YouTube. Looking at, as John was just reporting, ISM came out with some data here. Manufacturing index coming at 46.5. That's below the 47.6 that the street was looking for, and below last period, 47.2. Let's break that number down today with Tim Fiore. He's the chairman for the Institute for Supply Management's Manufacturing Business Survey Committee. Tim, again, still some tough times out there in the manufacturing world. What are the data? What's it showing you?
Yeah, not a huge shock, Paul. So we are sagging. We're continuing to sag, but we're still above the 45 level. The 45 level to me is a real cautionary level. The biggest reason for the sag this month is really that our revenue/production numbers were down, consistent with the going forward forecast for Q4. So overall, demand got a little bit better, but not by much. I mean, there's no way that we've conquered that. We're still waiting for demand to show up, and the prediction is probably Q1 of next year, after the election is over and continued rate cuts get implemented. Our revenue was down, a little bit of a disappointment, but we kind of forecast that. And along with that, the employment level was down too. So the output was really not that strong, but not a big surprise, because without a full order book, you're going to have to step down your output and step down your employment. And on the input side, it was accommodative. Inventories are still very low, and suppliers are ready to deliver. So overall, we're waiting for the election to finish, and maybe another round of rate cuts would be reassuring to the community. There seems to be a bit of freezing here, in that there's a question that came out of the panelists, is that how is the Fed going to be able to maintain low inflation numbers in spite of the fact that the fiscal policies of both parties are probably going to be inflationary? So that's kind of where we're sitting today. We'll see what the month of November brings.
So we know that you're deep into the numbers, but what should the average investor and listener take away from this? How much have the hurricanes played a role or skewed the numbers at all?
So we talked about the hurricanes last month, is that it could really confuse these numbers, and it might have. It's really hard to tell, because there wasn't a strong comment base around impacts from the hurricanes. But I think, for instance, the prices number going up to 54.8 is probably driven in large part by energy/transportation costs that affect everybody. And they weren't super extreme, but they impacted a lot of people with surcharges because of the premium charges required to move freight. And that's probably why we saw the prices number go up. On the output side, there could be a point and a half there on the production number that was impacted by it.
Right.
But it really didn't jump out at me from the comments that was the cause of this. So kind of indeterminate, I think, is the right answer for it. And it doesn't affect demand at all, because the hurricanes really isn't going to slow down the placement of new orders.
All right, Tim, thanks so much for joining us. Tim Fiore, he's the chairman of the Manufacturing Business Survey at the Institute for Supply Management. The smart kids know that is ISM. All right, folks, market drivers today brought to you by Interactive Brokers Portfolio Analysts. Consolidate and analyze all your financial accounts on one powerful dashboard for free. Sign up for Portfolio Analysts at ibkr.com/free. free PA. Lots of green on the screen today as John Tucker was just reporting. S&P up 0.9%. The Nasdaq's up a little over 1%. Lots of earnings out there, lots of economics data. Let's check in with Abigail Doolittle. She covers all the markets for Bloomberg. Abigail, what are you looking at this morning?
Well, some of the earnings movers are certainly interesting. What really stands out is that we have some of the big tech names higher today after having dropped yesterday. Amazon, of course, is one of the better performers, putting up a big quarter. Each of their three quote-unquote pillars, especially e-commerce and the cloud, doing very well. Right now, that stock up 6.6%, the best day since February of this year. NVIDIA, which yesterday went along with the tech ride to the downside, and Microsoft and Meta. Microsoft, by the way, rebounding, is also higher, so that's really helping out. On the other side, we do have Apple down, but well off of its lows, only down 0.4% at this point. They put up sort of an inline quarter and a little bit of a guidance outlook for the December quarter, the holiday quarter, in terms of iPhones. It seems as though this iPhone 16 is just not attracting new buyers in the way that they thought that it might.
iPhone 16.
And how do you like it? How do you like it?
Love it.
Okay, because I'm thinking about upgrading.
But I'm not. It's just a battery thing for me. I'm not. It's what the kids tell me is basically a camera with a phone in it. But I don't know.
I mean, you came from the 11.
Yes, I did. Big jump.
That's a big jump.
Wait, when are the artificial intelligence gizmos going to kick in?
Yeah, I don't like that idea.
I think it's supposed to be
I would
coming,
prefer
right?
to not have.
I'll pass.
When is it? Yeah. Yes, exactly. I'll pass.
I'll pass.
Well put, Nora. I will pass on that too.
But I know
I'm actually thinking about going back to a flip phone, no internet.
Okay.
Yeah, just old school. Maybe with 2 cans.
Yep,
with the
2
string.
cans. Exactly.
So you're also watching Intel. I mean, we're seeing
Yes.
this has been a hard year for the company.
Very
Shares
hard.
down 55% in this year. What is going on? Is there a turnaround happening?
Well, there may be a turnaround. It's interesting to see investors jump on this so much. So right now, the stock up 5.4%, the best day in a little more than a month. At the highs, up more than 7%, and that would have been the best day since August of this year, 30th. As you mentioned, very tough road for them, trying to bring manufacturing back here, trying to get that fab online. A little bit better in terms of the guidance for this current quarter and looking ahead, but investors are jumping on anything. Let's wait for more. One quarter does not a trend make.
All right, Abigail, thank you so much. Abigail Doolittle. She covers all the markets for Bloomberg News. Let's get back to the economic data of the day. That's the jobs number. Came in weaker than expected. A lot of folks said, hey, get ready for that. It was to be expected with hurricanes and strikes and all that kind of stuff. Let's check in with an expert here. Joni Biley, she's a division president at EmployBridge. Joni, what did you take out of the labor number today?
Yeah, this was a tough report. Certainly, I kind of will refer to it a little bit as maybe this was the October surprise that everyone was always waiting for. But we know that many of these job cuts, that are happening, a lot of it came from the impacts of the hurricane and the strikes. However, most of the job growth, and we've discussed this before on your program, most of the job growth is really coming from the government sector and the healthcare sector. So if you look at this private number, we actually lost jobs. If you back out the government gain of 40,000, we would have lost jobs. The private sector would have lost 28,000. So this is a concerning report, even with the hurricane and even with the strikes. Across the board, many of the sectors are really losing jobs, and especially, that manufacturing number had a loss of, I believe, 46,000 jobs. And then the sector that I'm in, the temporary help sector, lost almost 50,000 jobs. And so that is concerning as well. You can see that companies are still very cautious to hire, and they're letting their temporary workers, go first as they try to hold on to their permanent payrolls and permanent employees.
I mean, we're just under a week away from the next Fed meeting. And of course, this is going to be some data that the Federal Reserve will be parsing. How should we be thinking about this in the context of the rate cut environment and what trajectory could look like at this next meeting and beyond?
Well, I do think the Fed will really dig into this report because it's not just the October numbers that look so soft, but they also went back and revised the prior 2 months downward and took another 112,000 jobs out of the job market. So I think the Fed will be looking at this report and saying, the job market is not as strong as maybe we thought it was. And we are starting to see, even though wages are still up, I can tell you wages are starting to soften. They're certainly not keeping up, with inflationary costs. So I do believe that the Fed will look at this report and look at these numbers and what's happening with unemployment, the participation rate, where the job growth is coming from, and realize that, this is a bit of a challenging job market. And in other reports too, we are seeing, increase in layoffs in many sectors. I know the Challenger and Gray report came out and again showed, that layoffs continue to happen. So there are certainly some concerns out there in this job market.
Joni, just 30 seconds left here. The wage inflation or the wage 4% seems pretty solid to me, but you see a little bit of concern out there?
I do. I think employers have, been increasing wages really for quite a few years. And at this point with where the job market is, I think that that's going to just flatten off. That's what we're hearing from employers, large employers, mid-sized employers. They're really watching their labor costs, and they're having to be more conservative.
Joni, thank you so much for joining us. We always appreciate chatting with you on these important jobs days. Joni Biley, she's a chief workforce analyst at Employee Bridge, joining us via Zoom here. Again, the non-farm payroll came in at 12,000. The consensus estimate was for 100,000. Last month was 254,000. A lot of economists say, there's hurricane effects, there's layoff effects, so you have to take that into account. We'll have more coming up. This is Bloomberg.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Stocks are higher as we wrap up the week. The S&P 500 up 59 points, a rise of 1%. 57.64 the index. The Dow Jones Industrial Average up 456 points right now. That's up 1.1%. And the NASDAQ 100, 228 points higher. That is up 1.2%. Technology among the leaders, Amazon reporting strong results after the close. Also, the Amazon Web Services, the cloud division, that continue to regain momentum in the third quarter. Then you have Apple shares. Now, right now, they have paired some of the earlier losses down just about 0.4%. With quarterly earnings there, that sparked concerns about revenue growth and also the weakness in the Chinese market. Boeing shares right now, they are up 2.6%. They reached a tentative agreement with the union leaders to end that labor dispute that's crippling the commercial airline manufacturing. Speaking of manufacturing, the economic data just showing us manufacturing activity shrinking October for a seventh month. It was the lowest reading since July of 2023. The two hurricanes may have limited production in parts of the Southeast. And hiring advancing at the slowest pace since 2020. This is the government jobs report we got today. While unemployment rate, that remained low. Oh, by the way, this is like a public service announcement.
Go.
This weekend, daylight saving time.
Oh,
And-
right.
Are you
Well, you
serious?
Gaining an hour.
You gain an hour, but it gets dark at like noon. You know, it's like, whatever.
I'm a huge fan of daylight savings time, but apparently there are a lot of
Saving,
people...
it's not an S.
Oh,
saving.
Thank you. But apparently there are a lot of people that argue against it.
Oh, yeah.
I can see that.
It started because of, farmers in the Midwest.
Right.
More time to harvest and plant and that sort of thing. I think, right?
Daylight saving time.
We'll go with it. I'll take it.
Sounds good.
All right, very good. John Tucker, thank you so much. We appreciate that. Norma Linda, she's sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, and we're also streaming live on YouTube as well. So head over to that internet thing and search Bloomberg Podcast, and that's where you'll find us. Boeing, as John Tucker was just reporting, it looks like the leaders of the union and Boeing, they have an agreement. I think this is the third agreement they're going to bring to the rank and file. And let's see if the rank and file approves it, because they've turned down the last two. But it's 38% over 4 years and bonuses. I don't know. It sounds pretty good to me. Let's check it out with Thomas Black. He's a Bloomberg opinion columnist. He covers logistics, manufacturing, aerospace. Thomas, it seems like a good deal to me, but what do I know? What's going on here with Boeing and their union these days?
Yeah, it looks like quite a rich deal. We'll see if the workers want to take it. They started out with a nominal 25% raise offer, and it's now up to 38%. But if you compound that, which is how you should do it, it's a 44% raise over 4 years. So that's pretty chunky.
I mean, when we think about these negotiations back and forth, does this seem to be lengthy? I mean, I'm thinking back to the writer's strike that went on for some time, and you have to really hit a middle place to where everyone's coming to a compromise. How do we think about this with Boeing moving forward and getting production back to what it is looking for?
Well, the workers have all the power right now. They really do have quite a bit of leverage. So, and that's why Boeing has taken so much time trying to settle this. The Boeing is in bad shape financially. They're losing money. They have customers who are clamoring for aircraft. They have suppliers who are trying to figure out production schedules so that they can ramp up their production. So Boeing really needs to get its plant started. So the workers know this, and that's why they've been holding out, and they've got a deal on the table. Let's see if they take it. If they don't, I think there's a little bit of an anger issue maybe there. Maybe the workers want to lash out at the company, because 10 years ago, they did get a raw deal from the company when it had the upper hand. So the tables have turned, but now we're going to see Monday if they're going to accept this deal and get production cranking up.
So, Thomas, when you talk to people kind of within the process on both sides here, what's the feeling? I mean, at the end of the day, is it just a numbers thing? Is it 38% no, I want 42%? Or is there other issues that are out there that are challenging here? Because it's surprising that it's surprising that the negotiations have been so difficult. What do you think they're looking for?
Yeah, I think the workers really wanted to reinstate their defined benefit pension plan, which again, 10 years ago, that was taken away from them. As you know, those plans have been declining over the decades. There are very few out there, right, where you get a certain monthly retirement stipend, and that lasts, for the rest of your life. It's now all the 401k savings plan. So they were really trying to bring that back, which would be unprecedented. This deal does not do that. So we'll see if the pay rate was enough. And there's also a $12,000 signing bonus to sweeten the deal. So we'll just see if the workers are willing to accept this.
As you note in your story, there's not one but two issues. Of course, you have the strike here, but additionally, on the other end, we have to talk about this fragile supply chain environment for the company. When you're talking to sources and just research more broadly, what does it seem as though will be the next thing to push Boeing forward? I mean, this is still a lingering issue for them.
Yeah, well, Boeing has all kinds of problems in its factory floor. They've had quality issues. They've had work coming in at different stages that's got them out of sequence, and that's caused all kinds of problems. They've had supplier quality issues, so they've got some real problems to tackle now. This is really just the first step, is to get workers back in the factories. Number one issue for Kelly Ortberg, the CEO at Boeing, is to heal the rift with the employers. They have to get them on board and really change the culture on the factory floor so that they're making those quality planes and very efficiently. On the other side, it's the suppliers. The suppliers have been whiplashed quite a bit. It was the pandemic that hurt them, and then we had the MAX grounding because of the fatal crashes there, and we had problems with the 787 aircraft that was grounded for a while. So they've really had, they haven't been able to just produce regularly. They've had all kinds of on and off situations with Boeing. So that healing that supplier base is key as well too. So the good thing about Boeing is that they don't have to worry about the customers. The customers want the planes. The planes are on order. They have a massive backlog. They really just need to get their production up and ramp it up and show the regulators, the FAA, that they can make quality planes, and then they'll be in good shape.
All right, Thomas Black, thank you so much for joining us. Thomas Black is a columnist for Bloomberg Opinion, covering all the logistics stuff, talking about Boeing here. And I recently flew back from Charleston, South Carolina on Boeing 787 MAX. It was old. Now it was so old that they had, like in the seat back, if you want to watch a video, you kind of do your credit card through it. It was that old.
Ancient times.
Exactly. So I'm like, that told me that we need to get our friends at Boeing and all the workers there back to work, back together and cranking out some planes.
You know it's old when you can't find a place to plug your phone charger in.
Yeah. So, I mean, that's an old plane when there's no chargers, and half the time the outlets don't work. So, but anyway, we'll deal with it. That's first world problem. Let's get on in here. Let's break down some of these economic data points that we've seen. We can do that with Jeffrey Cleveland. We don't have Jeffrey. He's out in L.A., so he's probably not even awake yet.
But, I mean, there's so much going on in the market right now. We're sitting here in the middle of earnings season, and I feel like, everyone has these high expectations for tech earnings. It seems as though it's been a bit mixed. Now we're getting this economic data, jobs data, ISM data. Yep. We got the Fed next week, election next week. It just doesn't stop.
It doesn't stop. I mean, we saw some of the tech stocks like Microsoft that kind of sold off a little bit yesterday. They're coming back here today with the market. The Amazon numbers, I thought the Amazon numbers last night were very good. I think the street agrees that stock is trading higher, as John Tucker's been reporting. I mean, you get a company that's got a $2.1 trillion market cap, and to be up 7%, that's good for Jeff Bezos.
Yeah, and we were just talking yesterday. I know you mentioned the idea of whether eyes are still on the retail side of Amazon. I mean, we spend so much time talking about AI. You can't forget the retail space as well.
No, I mean, there'll be 2 or 3 Amazon boxes at my door when I get home tonight, I'm sure. But that part of the business, it's interesting. We all grew up with Amazon as a retail company, and it had very, very, very low margins, like many retailers do. And for the longest time, it didn't make money because they were always investing back into their business and making Amazon.com what it is today, which is, just the dominant player out there in e-commerce. Then, a decade or so ago, they started investing in this cloud business, and it became effectively a technology the technology part of the company is really what's driving this.
Most definitely. And you know, my favorite part about Amazon is the grocery delivery. I found that in New York. Didn't have that back in Virginia. I know, guys. First, I'm a DoorDasher, or
You
I'm a
get
Grubhub
groceries
user.
now? Okay.
Now I'm an Amazon
Well, you're
Fresh.
improving.
DoorDash and grocery
Trying to cook.
delivery, Uber Eats. Yeah, I go the old-fashioned way, John. I go to the supermarket and get my
As you
cart
should.
and do all that.
I do it
stuff.
the really old fit. I grow it.
Even better. Even better.
But I have to do
Ahead
it
of the
on
game.
Yeah. But looking at Amazon, again, the stock's up 7% today, up 30% year to date. Again, a market cap of $2.1 trillion, but it just seems like there's so many levers there to grow the company. One of them, and it's in my remit of the tradition of media and digital media, is their advertising business, Amazon.com. You know, they're cranking. It's such a huge platform. You've got such a big user base that they've been really big upon growing their advertising business. So we'll keep an eye on that. There's lots of good stuff there on the Amazon story. Stock up 7% today. Let's go to Jeffrey Cleveland. He's chief economist over there at Payden & Regal. He's out there in LA doing God knows what in Los Angeles, getting ready for the parade, I guess, for his Dodgers. Hey, Jeffrey, what'd you make of the jobs data today? I mean, I know there's a lot of noise in there, but any takeaways for you? I guess we do not have him. Or either that's my mic not, or my earpiece not working. But Jeff, he's probably at the parade as we speak.
I mean, as he should be.
But there's no
It sounds
Canyon of
fun.
Heroes there. Where do you do a parade in LA? Do you go to? I don't know. I mean, there is
And
a
it's
downtown.
early there.
Where is it? Rodeo Drive?
Yeah, I don't know. I mean, there is a great
How
downtown
flashy.
where all the financial companies are. That's where I spend my time a lot when I go out to LA. And then I guess maybe you go down whatever that road is to the Staples Center. That could be a good place to go from there to
Most
there. But maybe you need to be
definitely.
at Chavez Ravine, where the stadium is. So I'm not sure where the thing is. But
You sound a little bitter.
I am, because I mean the fifth
jealous.
inning of Game 5, disaster. The first game, taking Cole out with 88 pitches, disaster. There's just so many ways, and then all that is crazy. But anyway, the Yankees made it. Hopefully they'll be
They
back.
did.
It's all about Juan Soto here. So looking at the markets here, we got a good morning. We've got the S&P up 1.1%. That's up about 60 points. The Dow up 400. I'll call it 500 points. That's rounded up 1.2%. And the Nasdaq up 1.4%. Looking at the Nasdaq 100, over 20,000 right now, up 1.2%. The Russell up 1.3%. So the small caps, you like to see the small caps performing well.
We do.
Because that shows you improving breadth in the marketplace as well.
Most definitely. And it's just interesting seeing the market just blowing past this noisy report that we had from jobs. I mean, you expected a different type of reaction perhaps, but I mean, we are staging a rebound here.
It is, and I think, you see a weak jobs number, maybe that gives a little bit more leeway for the Fed to cut rates. We're not talking about next week per se, but maybe in December, because there is some talk, I would say, over the last couple of weeks, and maybe the economic data is strong enough that the Fed can, quote unquote, skip the December cut, and I think that was kind of finding its way into the marketplace. But you get a labor number today, even with the noise suggesting maybe it's not quite as strong as maybe we had thought, and so therefore it gives some leeway for the Fed. And again, looking at the yields here, a little bit higher. 10-year Treasuries up about 2 basis points, 4.3%. So for those looking to refinance their mortgages, not today. We've got yields higher. But more coming up. This is Bloomberg. Good morning.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker on the Bloomberg Newsroom with this Bloomberg Business Flash, being brought to you by Wells Fargo Advisors. Consider Wells Fargo Advisors Financial Network, where you can run your business with true independence, supported by unrivaled resources. Learn more at WFA.com/resources. And right now, the major averages, they are all higher by 1%. That includes the Russell 2000. Amazon among the leaders of the S&P 500. The third quarter result beat expectations. They delivered a solid outlook. Shares of Amazon right now, 7.1% higher. After their earnings, Apple shares are lower. The company's total sales is going to rise by a low to middle single-digit percentage in the December period. So that was lower than analyst projections. And Apple shares right now, they are down 1.4%. Earlier, talked to Gene Munster, managing partner at Deepwater Asset Management. He's looking to the future for Apple in particular when it comes to the iPhone's AI tools.
I'm a believer that these tools, adding AI to 20% of the world's population, is going to have a meaningful impact on iPhone growth, but we're just not seeing it in the December guidance.
The data we got today, among the data, manufacturers navigating a pretty rocky road. The ISM Factory Index down, falling to the lowest level since July 2023. S&P 500 up 55 points, up 1%. The Dow up 446 points, up 1%. The NASDAQ 100, 210 points higher. That is up 1%. This is a fascinating story in the Bloomberg. Greatest hits albums.
Yep.
Once a must-purchase have lost their mojo. So now the music industry in the U.S. is kind of rethinking how it markets greatest hit albums. And what was the greatest hit album of all time, the bestseller?
Oh, I'm going to say Stones.
No, the Eagles' greatest hits, 1971 to 1975.
That's a good
I'm surprised these aren't still selling.
Wait a second. Have you ever heard of the Eagles?
You got me. You did get me here.
Seriously?
No.
I'm
going home, John.
All right, I'm out of here.
All right. When you get back to your desk...
Have you heard of the Beatles?
The football team I do know.
Okay. When you get back to your desk today, do whatever you do on your streaming thingamajiggy, and just give yourself a half hour. Say, Siri, whatever it is, Eagles. Greatest hits. And just for a half hour.
I give up.
Recommendations for your Friday.
That's your Friday recommendation. So, John Tucker, we do the best we
I'll
can.
report back.
Very good. Thank you very much, John Tucker. We got Norma Linda sitting in for Alex Steele. She knows who the Eagles are, I'm sure. Alex Steele, she's out, but she'll be back very soon. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. Looking at WTI crude oil, it's at $70. From what I know, the cost to get that stuff out of the ground is like $50. I don't know. So you make money there. That sounds like a profit margin to me. And we had some energy companies reporting results today. Some pretty good numbers out of Chevron and ExxonMobil. Let's break it down with Vincent Piazza. He's a senior equity research analyst for Bloomberg Intelligence. He covers all the energy stuff for us, joining us via Zoom from God knows where. Vince, let's start with ExxonMobil. To me, that's kind of a bellwether kind of name. What did you see out of ExxonMobil today?
Yeah, it was a solid upstream result for Exxon. It was the first full quarter of the Pioneer Natural acquisition, which closed in 2Q. So Permian Basin output, upstream output, was very good across the board. Really, that's what drove the quarter for Exxon. $11 billion of free cash flow. They used that to pay back investors, dividends, and also share buyback. So good result for Exxon. Of course, the stock's up 17% year to date, so giving some of that back a little bit today. But in contrast, if we take a look at Chevron, very good result from Chevron. Higher output on upstream. I think that's what powered the quarter. For Chevron. Of course, they generated fairly stout free cash flow quarter over quarter. It was a good improvement, yet they still levered the balance sheet to pay out dividends and also share repurchases. So really the contrast there is Exxon's very strong balance sheet, low leverage, lots of cash on that balance sheet. And the free cash flow that they are generating to pay back shareholders, whereas Chevron using the balance sheet to keep up with the dividends and also the share buybacks, which they guided to for 4Q, similar to what the 3Q. So we'll see how that free cash flow relative to the payouts actually comes in next quarter.
As we're looking through these earnings, as you mentioned, we're seeing a beat for analyst profit output and sales estimates for both Exxon and Chevron. But I'm running SPX index IMAP, and that shows us a breakdown of the 11 sectors in the S&P 500 here. And we're seeing energy as ranked number 11 for this year, 6%. Can you please put this in the broader context of the energy sector and its broader performance this year?
Yeah, well, take a look at it over the course of the last several years, even after the post-pandemic bounce. The sector is about 3% in the S&P 500. So it's not getting any love from anyone, including value investors for the most part. There is this feeling that right now investors could be elsewhere. And when you talk to pension funds and endowments, there is a civic backlash against having energy in the top 10, top 15 names in your portfolio. And I think that seems to be prevalent throughout the industry. So aside from the Exxons and the Chevrons, which are the big daddies in the index, there really isn't a lot to really get excited for, just given the fact that there seems to be a great deal of backlash against the industry right now.
Hey, Vince, you've been covering the energy space for a long time here. I'd love to get your thoughts on what you think the market is discounting in terms of longer-term demand for fossil fuels, whether it's oil, whether it's natural gas, and maybe how those demand forecasts kind of different today versus maybe 10 years ago?
Yeah, we've always heard this thing about peak oil, yet it still seems to be there. But we are seeing conservation. We are seeing the push away from typical on-road fuels. There's a lot of Teslas outside my window right now. But on the natural gas side, guess what? You still have to plug these things into the grid, and natural gas is the top feed gas for the power generation sector. So I tend to think as natural gas is much more durable relative to oil, especially if we go down this path of electrifying on-road vehicles. And we also have the need for natural gas in the broader AI trade and the broader cloud sector as well. We need to power these things, and they eat up a lot of energy, and natural gas will be there for them.
I mean, of course, we've also had the ongoing strife in the Mideast. I'm curious how these companies have been performing and navigating amid this situation.
Yeah, so for the most part, the investor base wants less output and more return of excess cash. So that means discipline on your production and discipline in the way you spend to get those molecules out of the ground. So we're not looking for excessive growth in this stage of the cycle. These companies are much more mature. They're much more interested in tempering that output growth and generating the free cash flow to return to shareholders, either via a dividend, a supplemental dividend, or share buybacks.
Hey, Vince, 30 seconds left. If I want to go down to Texas today and drill a well, can I get approval to do that?
In Texas, it's still investor friendly. It's still energy friendly, especially in the Permian, especially in the Midland, and in places in the Delaware as well, where it's not a federal leased land. So for the most part, you're talking about a major area, a major producer in a very investor friendly arena.
See, John, I mean, if you're not nice to me, I'll just go down to Texas, start
do
digging
that.
a hole and put a well in there. I mean, it's, again, $70 is
and
the
as
price.
I pointed out before, Vince, it's one of the biggest productivity, the leader in energy with drilling.
How about
in
that?
productivity
And we're going to talk
gains.
about that coming up. Hey, Vince, thanks for joining us. Vince Piazza, Senior Equity Research Analyst who covers the oil and gas business for Bloomberg Intelligence. Been doing that for decades. He knows all these companies. He's seen all the cycles, and he is our go-to analyst here. And he's been writing about this for years, how these energy companies are focusing on shareholders and bondholders as maybe opposed to just growing at any cost here and drill. They're looking to take care of their shareholders. We'll have more coming up. This is Bloomberg.
Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, we have Norma Linda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, John Tucker's been reporting on this story this morning about the most productive U.S. industry is one that Wall Street wrote off. That is the oil and gas business. Apparently, those folks have been making some big productivity gains there and getting more oil, less costs, less workers, all that kind of stuff. David Wethy joins us. He's one of the reporters on that story. He's an energy reporter for Bloomberg News. This is our Big Take story, and we love the Big Take stories on Bloomberg here. David, how is the oil and gas industry becoming more productive out in the field?
Yeah, it's this was something that really surprised us in the oil industry for how far it spanned beyond just the industry itself into other parts of the economy. They're doing it just through little ways. Your first guess, you might think, oh, it's artificial intelligence and what doing it, but really it's not even that. We've barely scratched the surface on using AI. It's just a bunch of little things where on their own wouldn't move the needle, but you add them all up and it's making a big difference. It's little things like, incentives to the workers to drill faster, catered barbecue lunches out of the rig site, remodeling their living quarters. It's drilling in a unique pattern in a U shape where you couldn't figure out a way to get all the rest of the oil out of the ground and you have a small footprint. So instead what you do is you drill down sideways and then you turn and go 180 degrees the other direction to capture the rest of that oil. That was a concept that could never even be thought about earlier in the years. As we just sort of kept playing around with ways to drill underground, we figured out a way to do that and to do it correctly. It's also figuring out how to frack two wells at one time, and that not only reduces the friction in one well, it saves on the manpower because you can use one crew to now complete two wells at the same time. So it's all these little just sort of small efficiency gains where it's allowed us to get a lot faster at producing at less manpower. And what it really boils down to is you've got about a third of the rigs is what you've had 10 years ago, and yet you've got record production. So a dramatic decrease in the amount of equipment and then the people to run them while maintaining enormous amounts of output. And that's allowed the energy industry to surpass all other sectors in the economy.
So when we're thinking about productivity, of course, one thing that you need to be thinking about is, governmental legislation that will support this. And I see here in the piece, you all speak a bit about, this upcoming election. You say that Kamala Harris has repeatedly said that she won't ban fracking, which is a walkback of comments that she made in 2019. How much does the government and different policies play a role in the ability for these companies to excel?
It's a good question because sometimes it can be misunderstood. Chevron actually talked about it a little bit earlier, and they're doing earnings this morning and on some of the different interviews. Mike Wirth talked about how ultimately the U.S. shale is there, and it's not really being restricted by the U.S. government. People talk about whether you can go on federal lands or not. Really, where they're doing a lot of the drilling is on private, independent land that the U.S. government does not own. So really, that's not very restrictive to these drillers. Where it kind of comes down to more is permitting for things like pipelines. So you drill, you produce, but you got to send it off to market. You got to send it down to the refineries. And so getting timely approvals for the permits to build new pipelines to send more oil and natural gas away from the oil fields is key. And so that's kind of one sticking point for policy on any type of administration is where the oil industry is going to care.
David, you're down there in Houston. That's obviously the center of the U.S. Energy business. What's the feeling, just to broadly define, about the business of energy? Because as recently as 10 years ago, 15 years ago, they were talking about peak oil and all that kind of stuff. I don't hear about that as much anymore.
Yeah, you don't really hear about it. I think partly because there was this kind of ESG movement and green energy technologies and let's try to do both at the same time, and maybe kind of you saw investors pivot away from investing in oil and gas, and what it kind of led to was a decrease in spending in oil and gas, and so you've had less push to really grow supplies, so it's kind of tightened the picture a little bit. And so there's sort of less concern of, maybe this thing is going away, and more about let's make sure we have enough supply out there so the prices don't go crazy above $100 a barrel and really sort of raise red flags on the industry. So I think they're trying to kind of fly below the radar and not catch too much attention on energy prices that are too high, while still trying to maximize profit and have high enough oil prices that eclipse their sort of break-even price and give them a decent amount of profit. So, I mean, the mood around here is, I think if you're in the oil industry, you sort of feel like you're not appreciated enough, that the politicians don't, appreciate you. But otherwise, outside the industry, it sort of is a view of, it looks like it's pretty healthy and still productive and profitable and growing.
I mean, as we think about just digging a bit deeper into the ESG movement and where we are today, as we think about ESG and just investor sentiment surrounding this sector, have you seen at all a pullback in backlash in the space?
Yes, I think the backlash is diminished. I mean, there's still going to be the environmental groups out there that are raising concerns, and and we're hearing from them. But I think the broader, push to really kind of drive down this industry, I think you're just seeing a lot less. It's sort of just abated a little bit, and because I think the view is we still need supplies for a while of oil and natural gas, and we can't have electricity shortages even here in Texas of all places. So
exactly.
It seems like it's kind of dialed back.
Well, you've got your own grid. That's how you guys do things down in Texas. We understand that. David Wethy, he's an energy reporter for Bloomberg News, and he is based fittingly in Houston, Texas. Again, the big take story is about the productivity in the oil business, the energy business, and thank John Tucker for flagging that for us. That's our big take story today on the Bloomberg Terminal. You can find it at the Bloomberg Terminal and on Bloomberg.com/big take. Check it out there. We'll have more coming up. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been the U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Amy Glaser. She's the Senior Vice President at Adecco on the October jobs report. Alan Schweier, Principal Researcher on Human Capital at the Conference Board on a DEI, diversity, what is that, inclusiveness, environmental?
Equity and inclusion.
Equity, yeah, all that DEI surveys coming out. Things are changing out there. It is Friday, which means we talk municipal bonds. We'll do that with Eric Kazatsky from Bloomberg Intelligence. And then as well, we're going to check in with Dan Ives to fill out this hour. Get his thoughts on some of these tech earnings. So Dan Ives from Wedbush Securities. So we got a lot of stuff coming up in this hour. Right now, let's go to John Tucker and get a Bloomberg Business Flash. John.
All right, stocks are higher. This flash being brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth with advisor-centric support and future-ready technologies. Grow on your own terms with a partner dedicated to your success. Go to commonwealth.com to learn how. Stocks halting the two-day slide in the tech mega caps at this point. They're leading the gains right now. Got to start off obligatory. Amazon.com surging on strong results. Intel, those shares are rallying. The turnaround story there, rallying its outlook sparked optimism. The company's capable of reclaiming some of that lost market share. Apple seeing a kind of a mild loss right now. They have lingering weakness in the competitive China market after their results. Apple shares are right now down 1.6%. And then the economic data today. Manufacturing activity shrinking for a seventh month in October, the lowest reading since July of 2023. Then earlier today, the non-farm payrolls increased just 12,000 last month. That was kind of a muddy report, though. That followed a downward revision of the prior 2 months. The unemployment rate that held steady at 4.1%. Morgan Stanley economist Ellen Zentner, she was on the program earlier today. She's encouraged by the state of the American consumer.
Wage growth is still healthy while inflation's coming down. So you got real wages that are positive, you got gas prices that are lower, and so you're getting some support coming back for lower income households as well.
ExxonMobil and Chevron beating analyst estimates. Also, rising oil production from the Permian Basin helping offset weaker crude oil prices. S&P 500 up 56, the Dow up 473, the Nasdaq 100 up 226 points right now. Real quick, here's a fascinating story. It's hard to get audiences out to theaters to see something that isn't like Deadpool or Wolverine. Case in point, Warner Brothers. It's a strange strategy for Clint Eastwood's latest movie. It's become kind of a fascinating subject for moviegoers. Juror Number 2 is the name of the film. It's playing in fewer than 50 theaters nationwide. And the weird thing is, Esther Zuckerman on the Bloomberg says, this film is really, really good.
Really? So maybe they'll go a wider release? Or
well, so far, no. I mean, they're just, the way movies are released today. And I would guess that it's going to be his last film.
Could be.
Because he's like 94.
Oh, okay.
I met him. He was here once.
Is that
years
right?
ago.
Was he?
He only comes up. He's not a tall guy.
Oh, really? I would have thought, he seems
You've
bigger.
heard of Clint Eastwood.
Of course.
Okay.
Interesting. Well, maybe sometimes they release these things limited in theaters just so they can be eligible for Oscars.
Right.
But it's primarily going to a streaming service.
Juror Number 2.
Okay, well, I'll check it out.
I'm looking it up.
All right, very good. John Tucker, thank you so much for that. Norma Linda sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Brokers studio, streaming live on YouTube as well. Abigail Doodle joins us here in studio. Get a sense of what's going on with those markets. Abigail, it's a busy earnings day, busy economic release day. What are you looking at?
And so far, markets are liking it. Stocks up solidly, up 1%. This comes, though, after a down month for the S&P 500, the Nasdaq, the Russell 2000, and in particular, the SOX. The SOX is actually down about 15% from its all-time high. So today's gains may mask or smoke and mirrors to some degree some of the churn and uncertainty beneath the surface. But today is certainly going to the bulls. We've had this mixed big tech period. It started off, of course, with good reports out of Netflix, Tesla, and Alphabet. AMD not so great, then Microsoft and Meta not so great. And now today, Amazon's being received very well. Right now, up 7.1%. They put up good quarters. Investors are encouraged around the cloud. Also, e-commerce. Apple, on the other hand, and this stock is breaking down technically. You all know that I love a good chart. It is literally breaking down technically. It looks like it could go significantly lower. That's not to say that it will, but it's crossed below support, and that's a fancy way of saying that the buyers who would typically buy this stock, they don't like the news that China's weak. They don't like the news that the iPhone 16, that the uptake is not quite as strong, and it appears that there could be some more downside there.
Well, so for Apple, using the RSI function, and I see that.
Oh, I love it, Paul.
I love it.
I love it.
It's now below the 50-day moving average.
Correct.
How important is that, and how is that relative to the 200 moving day? Is one more important than the other?
So they measure different time period buyers. So it's below the 50-day moving average. That tells you the near-term dip buyers are basically folding their hands. They're out right now. Okay. They're waiting for more information. Now it's below the 100-day moving average as well, telling you that sort of the slightly longer term, the near-term dip buyers that have a little bit more of a stomach of steel, they're pretty much folding too. The 200-day moving average is down at 200. So basically, a good 10% below where the stock is right now. Based on the reversal of the near-term uptrend, basically a way of saying that most of those near-term buyers are out, looks like it's going to be up to those longer-term buyers.
All right, good stuff. RSI function, I learned it from Abigail Doolittle. I use it all the time. I buy it when it's at the bottom. I sell it when it's at the high. It looks to work like a lot. I don't know. That's all I know. So Abigail Doolittle, thank you so much. We appreciate it. She covers all the markets for Bloomberg. Appreciate getting a few minutes of her time. Again, going back to the jobs report today, came in significantly weaker than expected, but a lot of folks kind of expected it to be weaker than expected, given that we had some odd issues during the quarter or during the month in terms of hurricanes and various strikes. But let's kind of break it down a little bit. Amy Glazer joins us. She's a senior vice president at Adecco. Amy, again, a lot of noise in this report. When you strip it all away, what did you see today in this labor number?
Yeah, I think folks have to set this month aside. There was so much noise. We continue to see healthcare rise and boom. Education's doing well, government services. And right now, seasonal hiring is the topic of the day. So November, we're going to see a rebound. Folks just have to kind of ignore the noise.
How should we be thinking about this heading into next week's Fed meeting? How much do you think that they're really going to be factoring this into decision next week?
Yeah, again, I think they'll set it aside, but I think given some of the increases we are seeing, there's still positivity in the market. I think it's going to lend them some confidence, though we have seen it continue to cool, return to a more normal, stable environment. So I think it'll lend them some confidence going into next week.
Amy, how about the wage front here? We had on an annualized basis, year-over-year basis, average hourly earnings up 4%. That's right in line with kind of what we saw last month. It seems pretty solid out there on the wage front. How do you think about that?
It's solid. It's stable. Folks have chosen to put wages, money back into the wages versus these huge sign-on, retention bonuses, and things of that matter. So we continue to see it just really stable.
I mean, as we're thinking about the hurricanes that just passed, how much of a factor is that in this latest print?
I think it had a fairly large impact, especially in the Southeast in manufacturing. No one can really say what the true outcome was, but we definitely saw it, along with hospitality. Florida, my home state, was hit hard.
I also wanted to talk the upcoming election. What is your take on the upcoming presidential election's impact on the job market?
So it's interesting. Regardless of who's in power, we've seen the economy and the labor market rise and decline. And I really think a lot of employers right now are in that kind of wait and see moment, as they often are during times of uncertainty. So I think regardless of the outcome, we're expecting a recovery.
Amy, when you talk to your clients here, how are they thinking about their needs for labor? Are they finding the people they want? Are they retaining the people they want? What are some of the key issues that you're hearing from your clients these days?
So retention has definitely improved. We're seeing employees stick with their employers, which is great news for the employer. We're seeing an increased need in flexible part-time scheduling, both from a candidate perspective and an employer perspective. So that's a trend we're going to continue to watch. The gig workforce is expected to outpace the standard worker by 2027. So we'll continue to see flexibility is key.
I mean, one thing to think about, we're coming up on the holidays here. Can you just talk a bit more about what that looks like in the job market? I know that's an area that you're watching this holiday season.
Absolutely. Still seeing large demand in warehouses, customer service. It's a great opportunity for folks to pick up some extra holiday cash, and we continue to see more and more activity.
So, Amy, I guess how about for college graduates? What's the word out there for college graduates these days?
Yeah, so still hiring. We're seeing great positivity. A lot of employers really looking to upskill and reskill their current workforce and supplementing, bringing in new hires as well. As the age of technology, I was just at an industry conference with a lot of HR folks, and AI is somewhat disrupting what's going to happen in the future. So folks are looking for those that are digitally literate and savvy and upskilling their existing workforce to make sure they stay ahead as well.
Where are these workers working? Are they working from home? Are they in the office? What's the new world we're in?
It's a true combination. Really, hybrid is where we're seeing the most success, where folks can still gather together and have that sense of community and engagement, but have the flexibility to work from home as well.
On the other end, I see that you're saying that retirees are actively seeking to return to the workforce. Why?
Yeah, about 1 in every 8. Again, I think it's that sense of community. Some may be for monetary reasons, others just to have that genuine sense of purpose that having a job provides to you. And it's a really great opportunity for some of the younger generations to learn from those skilled workers, especially in the blue collar sectors.
All right, Amy, thank you so much for joining us. Amy Glaser, she is a Senior Vice President at Adecco, giving us some thoughts here on these markets here. I think it seems like when you look at the data, this country seems fully employed, pretty much at 4.1% unemployment. It kind of feels like a fully employed economy there with wages going higher.
Right. And then it's interesting when you hear anecdotally when it actually differs from that. So it's funny when you look at the numbers versus hearing story by story and looking at LinkedIn.
Yeah, exactly. Let's stay on the labor front here and get a sense of kind of where we are in terms of DEI, diversity,
equity and inclusion.
Equity and inclusion, thank you very much. It seems, I'm not sure it's waxing or waning, and some companies are backing away from it. Some companies continue to lean into it. Alan Schreier joins us. He's a principal researcher of human capital at the Conference Board. Alan, thanks so much for joining us here. As we think about DEI, we've seen some fairly high-profile, publicly traded companies kind of back away a little bit from that. Can you give us a sense kind of where we are on diversity, equity, and inclusion in corporate America?
Yeah, sure. I think there are a lot of reports of organizations moving away from DEI or backing off, if not canceling DEI, but they're very much the minority. Our research over the past year and those of that of others really shows that about 80 to 90% of organizations are holding the course or expanding their DEI programs. So we think it's maybe gets a little more attention when someone quits their DEI programs, but the great majority are holding firm.
I mean, what have been the effects? I mean, of course, we know last year the Supreme Court did reverse affirmative action, the ruling there. Has that had an impact at all when we think about hiring in the corporate America space?
Yeah, it has. Technically, the Supreme Court ruling, because this Title VI does not have an impact on the workforce, but we know that it does. It has a chilling effect on DEI programs. In fact, our most recent research shows that more than 2/3 of executives say that it is having a negative effect on their DEI programs. So yeah, I mean, the Supreme Court decision has certainly made an impact.
What are you seeing from workers themselves? What are workers looking for? Are they embracing DEI? Is this something they feel has value within their workplace?
Yeah, we just surveyed the U.S. workforce. We had a big sample, almost 1,400 workers, managers, and up to the director level. And workers are saying they want DEI. In fact, the majority say they would not work or would only reluctantly work in an organization that does not take DEI seriously. So that's a powerful signal. And it differs between groups at work, but overall, the majority of workers do want to see DEI initiatives and want to work in diverse organizations, according to our research.
So from an investor perspective, of course, people are really thinking about returns. Has there been any data to show that this actually impacts returns from companies?
No, it's a good question. And it's very hard to link DEI programs directly to financial outcomes. But we know that it does drive engagement. In fact, our survey respondents tell us that it improves engagement, improves belonging, improves inclusion, and improves retention. And if it does those things, then naturally there's a link, but it's not a direct link to financial performance.
So Dan, are there certain industries within corporate America that are more on board with DEI versus maybe some others?
Yeah, in this research we found that the services sector is, the responses from employees in the services sector are certainly stronger than in the core manufacturing type industries. Not unexpected, but again, overall, the workers want to see more DEI. But you're right, in certain industries there is a stronger preference for more DEI programs than in others.
Can you also speak to particular age demographics? Is there any difference in terms of which generations are embracing the push?
Yeah, and this is really important, I think, too, because I don't think anyone will be really surprised to hear that the younger generations, millennials, and Gen Z are more in favor, demand more DEI, expect more DEI than older generations. And we know that those generations will form 60% or more of the workforce by 2030. And if I may, the same is true for women and minorities. Women and minorities are already the majority of the workforce and have much greater expectation and demand for DEI in the workforce. So we think, demographics are destiny. This is happening very quickly. And an organization that really actively resists this will probably struggle to survive. I mean, from finding talent and even finding customers.
With about 30 seconds, I am looking at this story that says Boeing dismantles DEI team as pressure builds on the new CEO. Have you seen a shift of corporate, different companies actually moving away from DEI and not really seeing it as a priority?
Yeah, I think more are moving away from the terms DEI. They can be a lightning rod. And they're focusing on the work more than the words. For sure, some are backing away more comprehensively. Most are changing how they describe it and continuing with the work.
All right, we'll see how it plays out. Certainly a big part of the the culture here at Bloomberg. Alan Schweier, Principal Researcher of Human Capital at the Conference Board, joining us from Charleston, South Carolina, where I just was, via Zoom here. Markets still higher. S&P 500 up about 60 points towards the higher end of the intraday. That's up 1%. The Nasdaq's up 1.35%. This is Bloomberg.
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash, being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor to staff ratio. Small firm attentiveness, big advisor impact. Go to commonwealth.com to learn about our consultative support and technology. S&P 500 right now 56 points higher, up 1%. The Dow up 505 points. That's a rise of 1.2%. The Nasdaq 100, 237 points. That is up 1.2%. Search for Amazon helping lead the rally for stocks. The S&P 500 again, right now up just about 1%, recovering more than half its loss from yesterday. That was the worst in about 8 weeks. Amazon rallying after delivering the stronger profit for the latest quarter than analysts expected. Amazon shares right now 7.25% higher. You also have oil and gas companies lifting the market after several beat profit expectations. ExxonMobil, after its earnings beat, those shares up right now, up 0.2%. Intel also getting a boost. Revenue there topping analyst estimates, and it gave a forecast for results in the current quarter that did top expectations. This is helping, again, offset a 1.4% slide that we saw for Apple. Apple, again, down 1.4% right now, $222.71 a share. They expect revenue growth in the holiday quarter to be in the low to mid-single-digit percentages. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, Focus on Munis is brought to you by Build America Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Be part of building America. Invest in BAM.
Bam. I was ready this time.
Insured bonds. There you go, folks. That's how we do it here.
Pretty lame.
It's still pretty lame. But it's sponsored, and we appreciate it. Eric Kazatsky, he never thought he'd be sponsored in his life. He's a senior municipal strategist for Bloomberg Intelligence. He's down there in Princeton or somewhere. Eric, tough month for the bond market here. Give us the color from the municipal bond space for October.
Yeah. I mean, look, we came into October thinking it was going to be great. We had a lot of tailwinds coming in. Fund flows were strong. Rates had been rallying. The Fed had just made their first cut. So, by far and large, there was no expectation that returns were going to be poor this month. And, we were fully engrossed that we were going to have a very solid October and bucking the trend of the last several years, which have been losses. So quite surprising.
So I also see you sent along some charts, and it is you call it the October curse of poor performance here. But you're saying looking into November, apart from election volatility, which has been historically kind to munis in terms of November, how are you viewing that month and performance for the asset class?
Look, I mean, October is usually a month where you have softer technicals. You don't have a ton of money coming back to investors. So, if they're earning the carry in October, we consider that a big win. But we have built up a successive series of losses since the pandemic's happened. Now, November, on the other hand, we have quite a bit of money coming back. And typically, supply has been strong this time of year. Obviously, you have the election thrown in, so that's a little bit of a question mark. But 8 out of the last 10 years, positive returns for November. So we're expecting that trend to at least hold.
I also wanted to look at rates. I mean, we have the Fed meeting next week. How are higher rates playing a role in munis? I see that you're saying it's not necessarily a bad thing.
No, it's not necessarily a bad thing at all. Think about the average muni buyer, right? They're not a total return buyer. That's really on the institutional side. It's still a retail-driven market where it's buy and hold. So you're buying coupon income. The higher rates go, theoretically, the cheaper those income streams are going to become. And if you look at what, tax equivalent yields are for munis, right? I mean, you could get close to an 8.5% on a tax equivalent yield basis for munis, which is quite attractive and a considerable pickup over like-rated corporates.
How about new issuance? Are we going to have any kind of surge into year-end of new municipal bond issuers?
You know what? We pulled a ton of issuance forward, some that was probably going to come in 2025, some, the fourth quarter of this year. I think there was a lot of jitteriness about the election. Forward calendar is obviously very light right now, just $3 billion. It's typically like $12 to $14 billion this time of year. I think just everyone's sitting on their hands right now, waiting to see what happens next week and over the next several weeks, and hopefully we have a little bit of clarity fairly quickly.
Let's talk deals. What's going on at the University of Miami?
Yeah, I mean, they have a fairly large deal in the pipeline. Again, not 100% sure when that's going to price, but, we like to see those sort of larger deals into the market because they've been incredibly well received. Single A credit, it's going to have a little bit of spread attached to it, general obligation pledge by the university. And look, University of Miami is not going anywhere anytime soon. So, you're going to have investors clamoring to get some of that bonds.
By the way, my Dukies playing at the University of Miami this weekend. Hopefully they'll be kind to my Dukies. That could be a little ugly down there. So what's the feeling as it relates to this election here? How's your market? Because your market's very sensitive to tax policy, Eric. How's your market kind of thinking about this election? What are you hearing from your clients?
Yeah, I mean, look, It's a coin toss, right? And it could really go either way. No one's really sort of making a call one way or the other. But I think what's interesting is that, look, historically, Democrats have been kinder to the municipal market and Republicans not so much, right? And we saw that during the last, Trump administration with the Tax Cuts and Jobs Act, where a lot of the muni market came under fire. I think at the end of the day, the real group think of a muni market is that tax rates are going higher. And that really is just going to make the exemption and the income that comes with it much more valuable.
All right, Eric, thanks so much for joining us. As always, Eric Gazaski, he is a senior municipal strategist at the Bloomberg Intelligence. He's down there in Princeton, New Jersey, where so many of those people are, including their management team. Fantastic. Let's go to Washington, because we got an election next week, and there aren't many people in Washington I want to talk to. One of them is Nathan Dean. He knows what's going on there. We always get the straight poop from Nathan. Nathan's Bloomberg Intelligence senior policy analyst. So Nathan, you're down there, you're hip deep in all that Washington stuff and all the, the innuendo and all the talk and all the back office talk and all that type of thing. What's the feeling in DC about how this thing may break on Tuesday?
Yeah, so, I don't think anybody really has any good prediction of how things are going to break outside of the Senate race. And the reason why we're saying the Senate race is because this is a very difficult race for the Democrats. They're defending 23 of the 34 seats that are open at the moment, and a lot of those are in purple states or in Trump states. So if you're Senator Sherrod Brown, who's the Senate banking chairman, or Senator John Tester in Ohio and then in Montana, those are races that the Democrats have to win if they want to keep the Senate. Now, why do we care about the Senate? Well, the Senate obviously gets you confirmation of judges, but also regulatory leaders. So if the Republicans take the Senate and Kamala Harris wins, they can effectively block and jam a lot of the new regulatory leadership that she wants to put in place. So this could mean that Lena Khan at the Federal Trade Commission or Gary Gensler at the SEC sticks around for a little bit longer. If President Trump wins, then a deregulatory effort can move much quicker. So outside of the Senate race, everything else is too close to tell.
What's the latest on swing states?
So obviously, I think, what we're telling everybody is that it comes down to Pennsylvania. I mean, if Kamala Harris doesn't win Pennsylvania, the odds of her winning the presidency is very slim. So, we've been working with some European clients, for example, and as they come into the office, say 8 or 9 a.m., Central European time, look for the results in Philadelphia and Pittsburgh to really try and give you an indication of who's going to be winning this election. But I will say is that, the general thought here is that, there's this idea that the election could go for weeks. We just don't know. But I also think that there's a lot of folks out there that are thinking that at least we could get an indication of who the president is, maybe not officially, and maybe not called by the agencies and so forth, the news organizations, but we could at least get an indication of who the president is going to be on Wednesday and Thursday. So, from a market perspective, we're going to be looking to see for when those state results start coming in. And obviously, it's the 100,000 folks in Pennsylvania, North Carolina, Arizona, and Nevada, and Michigan, and so forth that are ultimately going to decide who the president is.
Speaking of election calls, what is the expectation for how long it could potentially take this election to be called?
Well, look, it really, this is the challenge of the American voter system is that each state has their own processes and procedures. I mean, certain states can't start counting early ballots until the polls close, for example. And so we just don't know how long it's going to take. However, what we can say is that, we should get an indication of how things are going. And when you look at the swing states in particular, you have a good mix of those that are on the East Coast and those that are on the West Coast, Pennsylvania, North Carolina, Arizona, Nevada, and so forth like that. But just going back to what I said earlier, for Vice President Kamala Harris, it comes down to Pennsylvania. If she can't win Pennsylvania, then chances are Michigan and Wisconsin are in play, and she loses the presidency. So, again, we're really paying attention to Philadelphia and Pittsburgh these days.
Nathan, I say this affectionately, a policy geek, a wonk. You've got some great research out there that says, hey, here's what happens to a couple of key industries from a regulatory perspective if Harris wins or Trump wins. What are the one or two or three things that you're really looking at or could be in play depending upon who gets in office?
Yeah, so if you're trying to think of like catalyst industries, meaning that the election means one substantial catalyst or the other, the investment banks are the perfect thing to come to mind because there's this rule out there called the Basel III Endgame. Now, if Kamala Harris wins, banks are going to look around a 9% capital increase starting in probably 2026. If President Trump wins, that rule, I think, effectively goes away. Renewables is another thing. Because Eric, in the prior segment mentioned that taxes could go up next year. The Trump-era tax cuts expire for individuals at the end of 2025, and Congress and the president is going to have to figure out how to pay over $4 trillion to keep those tax cuts going. And so is the Inflation Reduction Act at play? That's very important to the renewable industry, so something to keep in mind. And finally, big tech. You know, there's this stereotypical idea out there that Republicans equal good for big business. And so if President Trump wins, you know, big tech in particular could be a positive in terms of ease of regulation and enforcement. But there's this idea of economic populism going through the Republican Party right now, and a lot of scrutiny on big tech that could also be in play. So if you're in the big tech space, you know, and the Federal Trade Commission and the DOJ is investigating you, there could be some pretty tough investigations coming no matter who wins the presidency.
Hey, Nathan, I know we're on our first day of November, but there's always talk about the October surprise. Is that something that we saw?
I don't think so. I mean, you know, one thing that we've been leaning on is that there's not many people out there who are undecided. If you look at the charts, these charts are on the terminal, you know, you're looking at somewhere between 0.5 and 1% of the undecided or the independent population out there. They're still undecided. And so this race, in our opinion, has always been about, you know, Vice President Kamala Harris versus President Trump versus the couch. And if people get off the couch and they vote, then Vice President most likely wins. If people stay on the couch and they don't vote, then President Trump could win. So it's more about a turnout rather than an October surprise. And I really don't think we've seen anything that, A, really changed voters' minds in October. But the question is, was there an October surprise that would keep people from voting?
Yep.
We just still don't know yet.
All right, Nathan, thank you so much for joining us as always. Nathan Dean, he's a senior policy analyst for Bloomberg Intelligence. He's down in Washington, D.C. You can see his research. Just go to BIGO. And he's got a lot of great research out there about the different scenarios under each type of election scenario, Harris versus Trump versus split Congress. And he's got a lot of great research about which industries might be impacted. So take a look at that. All right, folks, speaking of the election, join us for complete coverage of U.S. election results Tuesday night. It kicks off at 5 p.m. Eastern with a special 2-hour edition of Balance of Power, followed by coast-to-coast Bloomberg team coverage at 7 p.m. Get live election results and analysis with context. Tuesday night on Bloomberg Radio, television, and the Bloomberg Podcast YouTube channel. So we got you covered there. We got you covered on the markets as well. John Tucker takes care of that all morning for us. S&P up 60 points. That's 1%. The NASDAQ, a little bit with some tech weight there, up 1.4%. Yield front, 10-year Treasury, 4.33%. That's up almost 5 basis points here today. So a little bit of a move there in the yield space. Gold higher. WTI crude oil higher, just over $70 a barrel. And Bitcoin from Matt Miller, that's up almost 1%, 70,500. This is
I will show you how to get the best funding for your startup idea. Let's get started. Here's the deal. If you have an amazing startup idea and need funds to fuel it, we're here to help. Simply send us a video where you explain your idea. Make it clear, concise, and compelling. Hook us in with your passion and vision. Don't forget to include your contact details so investors can reach out directly. This is your chance to shine and get your idea in front of people who can make it a reality. Imagine turning your startup dream into a thriving business. It all starts with that one simple step. So what are you waiting for? Grab your phone, hit record, and let your idea fly. The future of your startup could be just one video away. Remember, be clear, be passionate, and most importantly, be you. We can't wait to see what you've got. Let's get funded now.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom. This Bloomberg Business Flash. We're brought to you by BAM Mutual. BAM Mutual insures municipal bonds that finance essential infrastructure and provides guaranteed income to improve any portfolio. Be part of building America. Invest in BAM insured bonds. Get their money's worth today. We have a rally. 10 of the 11 major industry groups in the S&P 500, they are up. Consumer discretionary, that is the best performing group. Amazon among the individual leaders after its earnings report. Amazon shares up 7.25% right now. Apple shares, they are down 1.5% after their earnings report. That's one of the bigger laggards in the S&P 500. Federal Reserve, remember them, they meet on interest rate policy next week, and Priya Misra of JP Morgan Investment Management has this view of the rate path forward.
The Fed, we do think, is going to cut rates. Where I struggle with is duration, because as you know, there's a big election coming up. And depending on the outcome of the election, if we do have a scenario where there's a lot more fiscal stimulus, you can see the Fed not cutting as much.
We did get a couple of economic reports. The economy adding just a mere 12,000 jobs in October. That was actually the weakest since the pandemic. And October's ISM factory index down, falling to the lowest since July of 2023. Factory output alone posted the largest drop in more than 3 years. Here's an interesting stat for you. So the capital expenditures, the 4 largest internet and software companies, that will be Amazon, Meta, Microsoft, and Alphabet, are set to total well over $200 billion this year. That would be a record sum. So
wow.
Each company warning investors this week their splurge is going to continue into next year. So,
all right,
ramp up.
Yep, it's AI, baby, AI. All right, here's a story that jumped out at me, which is really interesting. I got Norma Linda sitting in for Alex Steele. I'm Paul Sweeney here in the Bloomberg Interactive Broker Studio. The Chinese car market is amazing. BYD, which is a Chinese EV maker, kicked off the final quarter of the year with a record monthly sales, continuing a strong performance. The manufacturer's global passenger car sales jumped 66% to a record 500,000 units in October. And what's interesting here is while BYD reached the 500,000 milestone earlier than expected, Western manufacturers, including Volkswagen, are struggling in the world's biggest auto market. So the Chinese EV companies are crushing it.
Yeah, it seems that the Western ones are definitely falling behind.
And it just seems like whether it's Ford, VW, they're just kind of pulling back a little bit on the margin because they have to make some profit goals because they're publicly traded companies. Some of the Chinese companies, not so much. So really fascinating there how the EV market's developing in China. Getting back to the markets, as John Tucker was just reporting, strong day in the equity markets here. Let's break it down a little bit with Sarah Ponczek. She's the first vice president of wealth management at UBS Private Wealth Management, coming to us live from Del Boca Vista in the Boca Raton, Florida area. Sarah, thanks so much for joining us. A lot of earnings this week, a lot of economic data this week. What are you telling your clients these days as they finish up the year and think about next year?
Yeah, it's been a bit of a marathon between this week and next week. Think about the amount of earnings that we've received, and not just from any companies, but the largest companies in the stock market and in our economy. Also, some economic data. Of course, Jobs Day was today. I'm sure you've discussed it at length already. Then we've got an election next week and the Federal Reserve. So, way to just jam it in to 2 weeks. But at the end of the day, when we're talking to clients, the picture really hasn't changed. Yes, there's a lot of data. And to be sure, the data is even messy. As you know, the jobs data that we received today is burdened by storms and strikes, and the data itself is messy. So when we look at the overall outlook going out from here, nothing that we've seen over the past week, and really nothing that we expect even next week, changes the outlook, which is still optimistic and positive from here.
So earnings season, we just got some mixed reports from these big tech names. I see that you're also keeping an eye on the tech sell-off. Talk to me about what's going on there, especially given the fact that people are really depending on this sector for the market's gains.
Right. We call it a tech sell-off, but nowadays tech sell-offs are really just blips. A couple of percentage points is hardly anything when you look at the run that we've seen in tech stocks this year and last year, coming off the volatility of 2022. And look, you're absolutely right. At the end of the day, these companies are so important, largely because they make up such a heavy weight of the indexes. So if you're an investor and you're either comparing yourself to an index like the S&P 500 or the NASDAQ, or you're invested in an index like the S&P 500, well, these large tech companies are the ones that are really leading the way. And at the end of the day, yes, we saw some volatility post earnings. Yes, these companies are spending so much money on CapEx or capital expenditures when it comes to AI. But at the end of the day, we do believe that this spending is going to pay off. These large mega cap companies are at the forefront of this AI boom that we're going to see in the years to come. And it's really amazing when you look at the big four tech companies, and I'll just lay them out, Microsoft, Alphabet parent, or Google parent Alphabet, Amazon, Meta. Those four companies alone account for almost half of spending on artificial intelligence. We've seen it laid out in their earnings, but at the end of the day, they're spending on what they believe is the future. And what we too believe is going to be a trend that's not only a trend, but is going to turn into revenue and earnings in the future as well.
Sarah, what kind of phone calls are you getting from your clients about this election? Are investors trying to position around it? Are they trying to just trade through it, ignore it? What kind of discussions are you having?
So people get a bit emotional, and for good reason, before and around an election. Not just recently, but I would tell you that over the past couple of months, I think it's a little telling, I've gotten calls from clients on both sides of the spectrum, so Democrats and Republicans, saying, okay, if X person wins the election and I want to leave the country, what does that mean for my portfolio? And can we still work together? So emotions run high, surrounding political elections. But at the end of the day, politics really don't have as big an effect on markets as some people tend to believe they do. If you look at any which scenario over history, a blue sweep, a red sweep, gridlock, X party in office with the other, controlling Congress and the Senate, there's really no statistically significant outcome when you try to compare different, representations of DC and the government to stock market returns. It really doesn't matter all that much. Really what matters is the Federal Reserve and interest rates and the economy, which frankly, the president doesn't have as much control as many people like to believe it to. We actually had an event this week where, the question was posed to the attendees, who do you think had, the worst market returns during their presidency and who had the best? I don't know if you want to take a crack at it, but most people didn't know the answer.
Yeah.
I mean, I think
so. It just goes. Go ahead.
As you're thinking about this election and pushing forward, I mean, you're in private wealth management. This is a very important space. What is your eye on right now if you all are kind of not focusing as much on the election to determine returns?
So look, when it comes to planning surrounding policy, yes, in the private wealth space, when you're working with high net worth individuals, family offices, there are potential policy changes that could pose, significant change for clients. So when it comes to the estate tax, for example, right now, the way the law is written is at the end of next year, the current law is going to sunset and the estate tax, the exemption amount is going to be half, going to be cut in half. So yes, we're doing a lot of planning surrounding that, working with our clients' estate attorneys to make sure that they're prepared. But at the end of the day, what we're really focused on is technology, which we discussed, doing tax planning ahead of year end. And then just when it comes to markets, looking at the economic data, looking at the trend for interest rates. Look, we're going to get a Federal Reserve meeting next week, but our economists expect that we'll see another 50 basis points of cuts by the end of the year, another 100 basis points of cuts next year. So if we know cash rates are coming down, interest rates are coming down, making sure that, our clients aren't sitting in cash or just short-dated treasury bonds, for example, because at the end of the day, reinvestment risk is an issue right now.
Sarah, thank you so much for joining us. Always appreciate chatting with you. Sarah Ponsek, she's the first vice president of wealth management at UBS Private Wealth Management. She's located down in Boca Raton, Florida. So good stuff there. S&P 500 up 51 points. That's 0.9%. The NASDAQ up a little bit better. That's up about 1.25%. 18,300 is the level on the NASDAQ here. 10-year Treasury yield 4.35%. That's up 7 basis points today. We'll have more coming up. This is Bloomberg.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, Norma Linda, she's sitting in for Alex Steele today. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Question is, what would you like to hear on Bloomberg Radio? Help make shows like ours even better by taking our Bloomberg audience survey. Visit youtube.com/Bloomberg Podcast and click the link on our profile or community section to take the survey, which is hosted by our partners over at Material. Fill it out at youtube.com/Bloomberg Podcast. All right, Dan Ives, Wedbush Securities, tech analyst. We're supposed to talk tech because a lot of tech companies reporting this week, but I need the inside scoop here. Ohio State at Penn State. Dan Ives is a Penn State famed alum, big football fan. Dan, what are your thoughts here? Ohio State coming into Happy Valley.
Look, obviously, it's going to be a tough game, like it always is playing the Buckeyes. But I think this is the year. I think Penn State wins this game. I just think we line up better. And I think this is one where we're a huge prove-me game for Penn State, but I think victorious Beaver Stadium tomorrow.
That's what we like to hear. That's a good prognostication. Yeah, this is a year where we can certainly go toe-to-toe with Ohio State. Hey, Dan, big earnings week. We had Amazon and Apple last night. Let's just go there. Apple, some people are a little bit concerned about some of their businesses and the demand and maybe out of China. What's your takeaway from Apple?
I mean, my take is iPhone beat by $1 billion. And if you look, that and services are the key. Services now $100 billion revenue in terms of annual. And you look at the guidance, iPhone growth looks strong for December. And this is even without China and the AI story, which doesn't even happen probably until April. You put it all together, there's some softness on maybe some of the other areas, delays, Mac, iPad, wearables. The big focus, iPhone services. This AI cycle is playing out. I think this is actually a very, very strong quarter.
How are we thinking about spending? I mean, we had the story that came out that said that tech giants are set to spend $200 billion this year chasing AI.
Yeah, next year they're going to spend about $300 billion because, as we've talked about on the show, this is the start of a fourth industrial revolution. And the difference now is that you get this earnings season for tech, you feel more bullish coming out of earnings season than going into it because the monetization is starting to happen on the enterprise. That all sort of starts what I believe is the second, third, fourth derivatives of AI with this unprecedented spending that we're seeing from tech.
And Dan, last night, some solid numbers out of our good friends from Seattle at Amazon. What's your takeaway there as you think about kind of the competitive cloud landscape out there?
Yeah, look, I think even combining on the broader with what we saw from Google and Microsoft, Amazon, they're basically saying like, look, we're going to double down on AI and on cloud and don't forget about us. And I think the AWS piece is a huge part of the valuation. And the stock was actually mispriced. And you start to look at AI advertising. And I think sentiment's actually still pretty negative on Amazon. There's a lot of growth levers. I think that was a huge step forward for Jassy and Amazon.
I mean, what is really the outlook as we're heading into Palantir earnings?
Look, when it comes to the Messi of AI, Palantir, to me, the best use case name when it comes to AI. I think this is one where we're going to have robust numbers from Palantir, both on commercial growth as well as on the defense side. But it's just another sort of notch on the belt for the broader AI thesis playing out.
Quickly, I wanted to know, have you been seeing investors punishing these tech names to the same degree if they're not able to keep up with expectations for AI development?
I think we lost Dan. He was, for those that weren't paying attention on YouTube, he was in a car driving out or being driven out to State College, Pennsylvania. Basically, if you want to get to State College, Pennsylvania, you come out, you go over the George Washington Bridge, you get on Route 80, and you just go. And it's about 4 hours and 10 minutes from the city.
Is it a pretty view?
It's spectacular. It's spectacular. And now tomorrow is going to be a prototypical fall day in Happy Valley, Western Pennsylvania. So every one of our listeners and viewers around the world, around the country, tune into the Penn State game tomorrow to see a beautiful fall day in Happy Valley out there in Pennsylvania, as well as a huge game. So that's good stuff. So we'll pay attention to that. I'll be watching for sure. UVA, I'm not so sure. And my Dukies, they go down to Miami. That's going to be a tough game because Miami is for real this year.
You're going to be on the edge of your seat.
Yeah, so there's a lot going on this weekend in college football and then in pro football on Sunday. And no more Yankees, so that kind of...
I just went down last weekend to D.C. for a Commanders game.
You did?
Yes, they eked out a win at the very last second. It was insane.
Because you're a Virginia person.
I'm Roanoke, Virginia.
Okay.
So
you're Roanoke?
I'm Roanoke, Virginia.
That's like southwestern Virginia.
The middle of nowhere.
You know some Roanoke, Virginia? Tim Craighead, who runs some of our European research for Bloomberg Intelligence. He's from Roanoke. I mean, two famous people coming out of there. How about that? Sorry, looking at these markets here, we close out the morning session. We'll hand it off to Joe Matthew with Balance of Power because, boy, he's got a lot to talk about down there in D.C. We got a pretty strong day here. We're kind of close to, a little bit off of our intraday highs, but we got the S&P up about close to 50 points here. That's 0.8%. The NASDAQ doing a little bit better, up about 1.2%. So investors embracing those higher growth tech stocks here on the back of some of that Amazon news. And I thought the Apple numbers were pretty good as well, as Dan Ives was suggesting. 10-year Treasury up 6 basis points, 4.34% there. So some movement there. The dollar also stronger. We can look at the Bloomberg Dollar Index, BBD XY. That is higher today. So we've got a little bit of strength there versus some of the other currencies. And I'll tell you, the yen, I mean, it continues to weaken here. We're up to almost 153 dollar yen, and we were at 140 just a few weeks ago. So we'll keep that in mind on global currencies getting ready for this election. Balance of Power with Joe Matthew is coming up next. But first, a news update from our partners at CBS News. That does it for Nora and me. Have a good day.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. In the presidential campaign's final days, former President Trump attacks one of his top Republican critics, former Congresswoman Liz Cheney.
Let's see how she feels about it. You know, when the guns are trained on her face.
CBS's Zach Hudak.
We have a recent statement that a Trump spokesperson just put out in which they tried to clean up Trump's remarks. They say that he was basically just trying to make the point that Cheney is an example of a warmonger who would not be so pro-war if she were over there on the front lines herself.
On social media, Cheney, who backs Vice President Harris, called Trump's language the stuff of dictators. As of today, some new questions for some hospital patients in Texas.
Public hospitals in Texas now legally required to ask patients if they're U.S. citizens and whether they're in the country illegally. Texas Governor Greg Abbott issuing the executive order in August saying Texans should not have to shoulder the burden of financially supporting medical care for those here illegally. Rice University political scientist Mark Jones says it's also a way for Abbott to campaign for former President Donald Trump, who he endorsed.
Abbott's primary goal is to shift the spotlight back to the issue of illegal immigration, which is a winning issue for Republicans.
Abbott also wants the federal government to reimburse Texas for medical costs. Chris Fox for CBS News, Austin.
In Orlando, 2 people were killed, 6 wounded in shootings that hit a late-night Halloween celebration. A 17-year-old suspect is in custody. Overseas, CBS's Vicki Barker on some news from Iran.
A top advisor to Iran's supreme leader has said Tehran could be pushed into building a nuclear weapon if Israel threatens its existence. Kamal Karazi told Iran's student news network the country has the technical capacity to build the bomb, calling into question Iran's repeated insistence that its nuclear program is for purely peaceful purposes.
Back here at home, the government says employers added just 12,000 jobs last month, way down from the month before. Investment strategist Dakin Vanderberg says the Boeing strike and 2 major hurricanes played a role.
So if we smooth out those large events, the October numbers aren't great, but put in the broader context of a really strong job market, we're not super worried about what those numbers look like right now.
The unemployment rate held steady at 4.1%. It's a big day in Los Angeles, a parade for the World Series winning Dodgers.
I've always been a fan of them, and this is my first parade going here, and I was super excited to come.
After the Dodgers took the baseball title in 2020, of course, there was no big public celebration because of COVID. Checking Wall Street, right now the Dow is up 462 points, the S&P up 50. This is CBS News.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
All the data's out. Now it's time to vote. Welcome to the fastest show in politics as the monthly jobs report shows the impact of hurricanes and strikes in the final economic salvo before Election Day and the Fed meeting. Will it matter for the campaign? We are joined ahead in studio here in New York by the stalwart, Bloomberg's Joe Weisenthal, with the view from Wall Street as we head now for the final weekend of deliberations. And we'll sit down with the man who wrote the book on Trump, Tim O'Brien from Bloomberg Opinion, with us, with insights from our signature panel. Bloomberg Politics contributors Jeannie Shanzano and Rick Davis are with us for the hour, the Friday edition, and we start as always on Wall Street. Let's set the baseline right now with Amy Morris. How's it look, Amy?
All right, thank you, Joe. Stocks actually staging a rebound as traders look beyond today's economic data to focus on the strength of corporate America. We do check markets for you all day long at Bloomberg. The S&P 500 now up 53 points. NASDAQ up 227 points. The Dow is up 476 points. And the Russell 2000 is up 22 points. The 10-year Treasury yield at 4.34% and the 2-year yield at 4.17%. And that eco data looks like this. U.S. hiring advancing at the slowest pace since 2020, while the unemployment rate remained low. But remember, October was distorted by that strike at Boeing and by some hurricanes, although the Bureau of Labor Statistics says they can't really quantify the net effect of the storms on payrolls. Apple's shares right now down 1.8% after yesterday's earnings report, when Apple said its December sales would be about a percentage in the low to middle single digits. And analysts had projected a 7% increase. So the company has posted a decline in China's revenue last quarter as well. That's falling short of estimates. Amazon, on the other hand, beat expectations on the strength of its cloud services, advertising, and e-commerce. Amazon shares right now about 7.2% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Back to Balance of Power now with Joe Matthew.
All right, Amy, thank you so much. Welcome to the Friday edition of Balance of Power. Welcome to November, the 1st of November. I forgot to say rabbit this morning. I just realized it. As we join you live from World Headquarters in New York on Bloomberg Radio, on the satellite radio, and on YouTube, search Bloomberg Business News Live if you want to come on in. We've got the camera set up as always. It's great to be back here as we settle in for the long haul. We're not here by accident. We are moving into World Headquarters for the duration of this election. We're not going back home till they call it. Kaylee's on her way. She'll be joining us with special coverage, full smash, Tuesday night right here on Bloomberg Radio, as you would expect. That goes for YouTube as well, by the way. You want the best free coverage in the world? Keep both of these options in mind. It's all about Wisconsin today. Kamala Harris leaving Las Vegas to Wisconsin. She's in several locations there. How about the Isley brothers? That's pretty cool, by the way. playing together. Big concert tonight with many more contemporary artists. But as Gwen Moore reminded us yesterday, the Isley brothers are still together. Donald Trump in Warren, Michigan, back to Milwaukee again. Yeah, it's all Wisconsin, it's all Michigan, and we have new numbers out in the swing states. Marist right now finds a 2-point race in Pennsylvania. Harris up by 2, Harris up by 3 in Michigan, Harris up by 2 in Wisconsin. But I can find polls that say that they're tied or that Donald Trump is in charge. And Politico put this together pretty well for us. Before we bring in Joe Weisenthal, just imagine, you want to know how chaotic all of this is. 538's forecast, Trump 53 times out of 100. New York Times polling average, Harris by 1 point. Nate Silver's model, Trump 55% of the time. S&P 500, Harris. Polymarket, Trump. Voter enthusiasm, Harris by a whisker, according to Gallup. Right track, wrong track, Trump. Net favorability rating, Harris. No one has a clue. Although Wall Street, again, seems to think that this is Trump's race to lose, and that's where we get into it. With half of odd lots, the stalwart, Joe Weisenthal, is the first phone call we make whenever we leave Washington and come to New York. It's great to see you. Thank you for stopping down to see me. Great to see you.
Thank you. Likewise.
I just want to get in your head for a little bit here because Wall Street thinks it has this figured out, and I want to know why.
It's interesting. About a week ago, I don't think it was just Wall Street. About a week ago, everyone I was talking to, they're like, "Yeah, I think Trump's going to win."
You woke up one Monday morning.
Yeah, it's like about a week or so ago, and I realized that everyone around me just sort of thought Trump was going to win, and I have no opinion. I'm just a journalist. I'm not. But then it's like, oh, this is really like locked in as conventional wisdom. But the thing was, like, there's no poll, there's no prediction market, there's no model like the Nate Silver model that has ever said Trump is a lock to win. Even at 60% or say even 65% in the prediction markets, which was around as high, is not a lock. I mean, 1 in 3 odds come in all the time. Well, I guess they come in about 1 in 3. Like, that's not a lock at all. And so it's been interesting, to see this tightening in some of a little bit of movement in the prediction markets, and then some of these Trump trades, some of these stocks like start to waver a little bit. In the last week, it feels like to some extent people have woken up to the fact, no, this looks like a very close race based on almost any metric you can see.
So with all of that said, what are we setting ourselves up for if this is going to take days? We wake up Wednesday, nobody knows. Is this market primed for volatility?
I think there's two things. I mean, uncertainty, people would probably just like to know. Yeah. And then I think that there's the question of, like, how much will it be contested through the legal system? And that creates its own uncertainty because it pushes back the date. Yeah. But I think then there's this other element that it's not very good for the country to have so much distrust about the results, right? So even like let's say, okay, let's say it were to take 2 weeks or something like that, because there's a lot of close races and some ambiguity in some states. But then we get some sort of resolution. Okay, that's uncertainty. But then there's like, what does it mean that every election now is presumed to be fought over courts and technicalities rather than the votes? And then I think this is where the sort of like deeper anxiety comes in about, like, you think about treasuries, you think about the US dollar, you think about what makes American companies great. It's not great for American companies or enterprise in economics if there's huge chunks of the population that it feels like will simply not trust the results, whichever way it goes.
Is that why the VIX is creeping up on 22 here today, or is that have to do with earnings? I think
there's a lot. I mean, look, I think there's a lot going on. I think, once again, today's jobs report, we sort of collectively, I think, blacked out the economy over the last month. They're like, oh, we're just not going to talk that much about the economy. Yeah. You haven't heard much. There's a Fed meeting next week too. No one's really talking about that. I mean, I guess at 25 basis points a lot, but like now there's a fair amount of economic ambiguity after today's jobs report, and once again a lot of uncertainty. And then you see some of this other stuff with rates rising in the UK and rates rising in Australia hitting their highest levels since last November. What's going on there? So the other thing that's going to happen is we're going to have to refocus and figure out what's happening in the U.S. economic conditions, which are ambiguous.
So let's talk about that jobs earnings report, because I saw you tweeting about it earlier, and clearly this is not just noisy. This is an aberration. We had hurricanes, we had strikes.
That's right.
And people are wondering how to interpret this. Donald Trump, by the way, is blaming the Harris policy, or even
as one does in an election.
Yes, exactly. But the fact of the matter is, the response rate, as you point out, to the establishment survey was just over 47%, way below last month, 62%, lowest since January 91.
Omer Sharif, who I have to give a big shout out to, he has a little shop called Inflation Insights, and he knows the data better than anyone else. And I saw this in one of his email blasts that he sent out right after the report. Again, so there's so many levels of noise here, because you had the hurricane. Everyone knew the hurricane was going to have an effect, which is why there was already a big step down sequentially in the expectations. That's why economists had 100K. So everyone knew that. Everyone knew the Boeing strike had happened. I hadn't seen as much talk about that specifically as a factor, but that was obviously something that people could have anticipated. I would say two things. A, the number was still weak. B, the revisions were negative, and this is really important because we've had negative revisions to prior jobs report throughout the year.
Yes.
Then last month we got upward revisions, and that sort of, I think, was taken as a signal, oh, maybe like this wasn't a blip, is actually sustained. To see those get revised down again, I think creates a lot of maybe more confidence that there is a weakening. We also got the JOLTS report this week that showed an ongoing decline in the quits rate, an ongoing decline in the number of job openings. That reminds people that the job market is weak. But yeah, to this point about the non-response rate, sort of just another reason to scratch our heads and say, we don't really know what's going on right now.
But then you poke the bear and say one issue with chalking it all up to the hurricane and strikes is that every economist who put out a number on the Bloomberg survey knew there were hurricanes and strikes.
By the way, we have to give a big shout out to our colleague Anna Wong, who had she had a negative 10K, which was far and away the closest of any.
She would have won on The Price is Right.
She would have definitely won on The Price is Right. So this is really impressive because some people had well over 100K. So there are some people that were taking this, but again, the fact that we knew about the hurricane, the fact that the Boeing strike has been in the news, it's a reason to simply think well, you can't just dismiss this number because these all get baked in when the professional forecasters put in that forecast.
Right. It's a funny business.
Yeah.
Where do you think about this whole poly market story, or does it bore you?
No, I mean, I think it's really interesting because I think a couple of things. One is that it seems like now, there's a lot, it seems like now that prediction markets are here to stay, and there'll always be a coverage. There'll always be an aspect in how we analyze big events. Two, I don't think it's crazy to think that these numbers aren't as good in the sense as other markets that are out there, like the U.S. Treasury market. They really are thin markets. Something a friend of mine pointed out to me yesterday is if you want to sell 2 million contracts on Trump. Let's say you're long Trump and you want to get out of your position. The poly market headline prices is around 61 or 62. To sell 2 million drops the price to below 57. The order book is really thin on these markets. Another thing to note is that if you look at the regulated U.S. prediction market, Kalshi, which only got the green light to do this a couple weeks ago, their prices are meaningfully different than the poly market prices. It remains a bit of a mystery why traders can't arbitrage the gap between the two. So I would say, A, these markets are here to stay. They're going to be part of how we consume information going into elections for the time being, for a long time. But the degree to which they're really clear signals, maybe just because they're young, because there isn't a lot of money behind them, because there are regulatory constraints and all kinds of, it's not legal for U.S. citizens to do poly market. We all know they do it because they use VPNs to disguise where their computer is coming from. But it's not legal. And so, when these markets have sufficient depth so that we can say, okay, there is real money here. We can really find a correlation between, say, what treasuries are doing, what Bitcoin is doing, what poly market is saying. We're not there yet.
Let me ask you this. I have a minute left. I don't want to blow your mind, but look at the rules on some of these contracts. Poly market, resolution source for this market is the Associated Press, Fox, NBC, calling the race. Robinhood will pay out January 8th after the results are certified by the Congress on January 6th. Is part of this being driven by conspiracy, thinking the House will solve the election?
I'll say this. People who are into betting and take these markets really seriously, one of the things they're talking about is the possibility that Kamala Harris wins, but like, let's say Wednesday, it's clear. I don't know if it will be, but let's just say Wednesday we're clear. But there is a belief that there is a contingent of Trump traders who wouldn't bid it, who will buy his odds even at 2 or 3%.
Yeah.
Because they're convinced that some sort of Deus Ex Machina will happen in the House.
Right.
So it may not even go to 100% even after everyone's called
So
it.
think of all the inputs.
Yeah,
It's
so many
absolute
inputs and
madness.
rules.
Do you
Yeah.
watch the election results like it's a game Tuesday night, or you just wake up the next day and tell me what happened?
Of course, I'm going to be online,
All right.
and I'll be watching.
Got to be the
everything.
first Grateful Dead shirt in the history of Balance of Power. Paging Wiley Nickel, Joe Weisenthal on Bloomberg.
It's 12:21 on Wall Street. I'm Amy Morris. We do have green on the screen. Traders paying more attention right now to corporate earnings than that eco data for the month. We check markets for you all day long at Bloomberg. The S&P 500 now up 48 points. NASDAQ up 213 points and the Dow up 455 points. The 10-year Treasury yield at 4.33%. The 2-year yield at 4.17%. U.S. hiring advanced at the slowest pace since 2020. while the unemployment rate remained low in October, a month distorted by severe hurricanes and a major strike at Boeing. Boeing shares rose after reaching a tentative agreement with union leaders to end that labor dispute, the one crippling the company's commercial airplane manufacturing. The union is urging its members to accept the offer and end the strike. Shares of Boeing right now 3.4% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris, and that's a Bloomberg Business Flash. Let's go back now to Balance of Power with Joe Matthew.
Amy Morris, thank you, and welcome to the Friday edition of Balance of Power on Bloomberg Radio, on the satellite, on YouTube. We made it to New York. We're live at World Headquarters in Manhattan, here at the mothership for the duration, the big show, Tuesday night, special coverage. And of course, we're all, we're looking at this as election day or election week, really, because nobody thinks this is finished by Wednesday or Thursday, depending on who you ask. I've had a couple of people come in here lately. I don't know if they're just projecting aspirations that we might get an earlier call than we did 4 years ago. But of course, so much of the conversation in the closing moments here, where we're 4 days out, can you believe it, has just devolved around garbage. Literally, we're talking about garbage. And Donald Trump, as we'll get into a little bit later, gets a fourth day out of this with the stenographers highlighting the changing of the way they recorded this call with Joe Biden. We'll do another garbage stop at some point here. But the comments about Liz Cheney are resonating today as well. You just can't even keep up with the news flow at this stage. It'll be like this all weekend, early next week into Election Day, as Donald Trump spent some time with Tucker Carlson. It was a Halloween special. And actually quite scary, I suspect, if you are Liz Cheney watching this, some saw it as a threat to her life. Listen to what Donald Trump said last night.
She's a radical war hawk. Let's put her with a rifle standing there with 9 barrels shooting at her, okay? Let's see how she feels about it. When the guns are trained on her face. They're all war hawks when they're sitting in Washington in a nice building saying, oh, gee, let's send 10,000 troops right into the mouth of the enemy.
There you have it. There's a smattering of applause there. Let's see how she feels about it when the guns are trained on her face, he said. Timothy O'Brien is executive director of Bloomberg Opinion, senior executive director, and he's the man who wrote the book on Trump, and we wanted to spend some time with him since we're back here in New York. Tim, it's great to see you.
Good to see you,
thanks
Joe.
for spending some time with us here.
Thank you for having me.
Surely you were watching this. You can't hide from it. This was at the Desert Diamond Arena in Glendale, Arizona. How is that for a closing argument? Some folks are, in fact, suggesting that this might have put Liz Cheney in danger, that it was a threat on her life. Of course, the Trump campaign is not going to see it like that, and we've already heard from them. But how did you interpret that remark?
Well, I think the Trump campaign's not going to see it like that because they want to, as every campaign does, cast their candidate in the best light. The reality of it is he made a statement about Liz Cheney being soft on war and that she needed to know what the experience of war was like in order to be more sensitive to it. However, the way he said it invoked violence against her, pure and simple. There's been a debate about the specifics of what that violence might have been based on what he said, but the reality is he's a former president of the United States. He is on a stage and he is talking about violence against one of his most high-profile critics, a member of the Republican Party, and he's putting her in harm's way, pure and simple. And he's done this for years. He's done it at his rallies, not just about Liz Cheney, but about people he regards as his critics or his opponents. And it's not an accident. He revels in violence. He's called for it in the past. So it's irresponsible and it's uncivilized. And I don't think that that's an ideological or a partisan viewpoint. It's just about, I think, civility and a call to be better in the way that we speak about our differences and not have it devolve into violence. But that's not who he is.
Liz Cheney responded, you might have seen, quote, "This is how dictators destroy free nations. They threaten those who speak against them with death," unquote. She retweeted the video of him delivering those words, sitting down with Tucker Carlson. So bring me, I know you can't.
Can I add just one other quick thought, Joe?
Yes.
Recently, his chief of staff, John Kelly, said he believed that Trump had fascist tendencies. Another General Milley, has criticized Trump. Milley, a senior member of the military, said he felt physically threatened in the wake of speaking out publicly about Trump, and he went home and he put in, bulletproof windows in his home. So these aren't just light, fantastical fears that these people have once they get in the radar.
Well, can you imagine the threats that Liz Cheney is dealing with that we never hear about? But I guess my question for you is, what's Donald Trump's motivation here? This is how it goes in the final throes now. This is the third cycle we've seen. And then that last week, wild things are said. To your point, not all of them are new, but you get this concentrated version. And he's clearly flooding the zone. And we're talking about him all day, every day. Is that the point here, or he just can't help but to say some of these things?
I mean, I just think it's who he is. I think one of the reasons his base finds him attractive and feels an allegiance to him is that he's authentic. And that he does speak, I think, in a very visceral way about what he cares about. And what we found out at Madison Square Garden is he cares about race and misogyny and hostility. And what you found out last night is violence. And I think that he's just in the home stretch and he's speaking around the themes that he has used for a long time. I think they're obviously becoming part of our public debates because we're close to Election Day. But this is obviously not standard political fare. And I think that people thinking about this and what to do about it as voters should talk about the public dialogues they want to have around the economy and policy and foreign affairs and the things that we should care about as a community, as opposed to, I think, some of these cultural and personal issues that divide us.
In the closing hours of this campaign, a real Trump supporter who actually knows the policy proposals and is familiar with his first term, say the same thing. No new wars, good economy. I don't care about the rest. Those are my priorities, which is a pretty strong message in the closing hours of this campaign. How does Kamala Harris answer it?
Well, I think she's been trying to lay out policy issues. She's spoken about.
Has she effectively answered that?
I think she has.
How about this no new wars thing? That resonates with a lot of Trump supporters.
Well, I think that the United States has to decide what they mean what we mean when we say no new wars. I think people feel we have an obligation to Israel. People feel that we have some people feel we have an obligation to Ukraine. Some people feel we have an obligation to Taiwan.
And he would tell you none of those would have happened
if he was president,
office,
right? But in fact, there were multiple aggressions while he was president, and the issue here is what's our role in the world in terms of securing global security so we can have a strong economy and a safe world. Those are, I think, also nonpartisan issues that we should think long and hard about.
So give me Timothy O'Brien's election night. I want to know what you're watching, what you care about, how you take it in.
Well, like everybody else, Joe, I'm watching the swing states. They're as tight as ever.
Are you of the mind, like so many people, this call happens earlier than 4 years ago?
No, I'm not.
So you're in for the long haul.
Yeah, I mean, remember like 4 years ago, we were waiting on Pennsylvania till Friday or Saturday.
Yes.
And I don't know if it'll be Pennsylvania this time. It could be Michigan. It might be Georgia or North Carolina. Those three seem to me like the iffier ones. And it's going to come down to, I think probably what happens in half of the swing states in terms of who gets into the White House.
How concerned are you about reports of poll watchers intimidating people, the many lawsuits that we see continued to be filed in real time, challenging results in Pennsylvania again and in other states? What's this going to feel like by next Wednesday or Thursday?
Well, I think people are already drained by it now. I think this will just be another turn of the screw, but we have to go through this. I think voting is important, again, for nonpartisan and non-ideological reasons, and we should think of polling places as safe havens, not places where you're worried about getting beaten up.
Well, yeah.
And our elections are not fixed. In the troubled elections around the entire planet, the United States does a pretty good job of having clean and fair elections.
There's a lot of Stop the Steal tweeting going on out there already. Marjorie Taylor Greene, Donald Trump himself, talking about massive, widespread fraud. And I was talking about this yesterday. He talks about the weave. We call this the blur. Every day, 5 headlines like this, and people start to just kind of step back and say, yeah, this whole thing's broken. It's crazy out there.
I can't trust anything.
Right.
And it's not just about
the cumulative effect.
It's about war or immigration or the economy. You name the issue. And I think it is designed to keep us from focusing on the facts and from having a healthy conversation about how to think about the facts.
Sure. So Wednesday, Thursday, more lawsuits are filed and so forth. Is this the 9-week slog that Bruce Melman was writing about, where we really actually don't have this settled until January 6th on certification day?
I think it depends on the margin of victory.
Okay.
And then I think it depends on how the alacrity with the judges who preside over these in courtrooms across the United States respond. They've already been pretty aggressive in this cycle about batting back the more ridiculous ones in a way they weren't in 2020. And the judges comported themselves well, I think, in 2020. But, you know, that's sort of a knife's edge to keep an election result balanced upon.
Does he declare victory at 10 o'clock at night on Tuesday, no matter what is
Donald
happening?
Trump never loses, Joe. His gravestone will say, "I won." So
sounds like a yes.
Yeah, I think he'll declare victory for the next.
But we've been through this a couple times already. So does it land differently in 2024?
That's a great question. I think, you know, because at the end of the day, voters are the thing that will preserve and save us, not journalists, not lawyers, not the federal government, but voters. And I think voters are the ones who have to keep, you know, their eyes on the prize in all of this.
Well, I suspect that is something that a lot of news organizations are prepared for, and I wonder what this is going to mean. Later this hour, or later in the program, I should say, we're going to talk to Julie Pace from the Associated Press, who's tasked with making the call. It's a different equation against the backdrop of all of this noise, isn't it? Do you think the Associated Press is compelled to maybe slow the roll a little bit more in 2024?
They've been around the block. I think they've always been an extremely valuable and judicious news organization for that reason, and I think they'll call it as they see it.
Well, there are a lot of inputs this time. You know, when you're looking at a district and you know there's a potential for a recount or a multiple lawsuits, do you factor that in, or should this be truly a numbers game?
I think they have to call it based on the numbers they see.
Yeah.
And if those numbers are contested later, fine. But they have to call the numbers as the polling data shows.
It's the Associated Press will be the gold standard. We'll be watching a lot of other networks as well. But when you hear us talking about these races next Tuesday, Wednesday, Thursday, and beyond, that will be the number that we're looking for. Do we get a call in the Senate earlier? We'll have a sense.
I think so. I think, you know, the Senate, I think the Republicans are in a very advantageous place with vis-a-vis the Senate, and very competitive in the House. And I don't think the kind of, you know, propaganda swirls around congressional races that swirl around the presidential race.
I'll get a bunch of tweets for this, but Philip Bump is writing, we just have a minute left, in the Washington Post about how Donald Trump talks about groceries, and he constantly goes back to the BLT, bacon, lettuce, tomato, in his stump speech,
right?
Because he's maybe never gone grocery